it didn't transition. There we go. Morning, good morning. How are we doing, traders? Have you got your, is your mic sorted, Anastasiia? Or do you want me to wait? Okay. How are we going, guys? How are we doing, Raw? How are we doing? How are we doing, Sam, Sage? How are we going? Logan, Kimmy, got Tamil. How are we doing, guys? Good morning, good morning. Happy Thursday to everyone. Hope last night you guys went well. We do have Anastasiia jumping in with me today.
Right now.
There we are. There she is. Here she is. How are you doing? Ahmed. Thanks, brother. Thanks, brother.
Oh, that's a lovely comment.
Hello, Kim. How you doing, Kim? Jordan. I hope you guys went and checked out Trade Delicious's new video, by the way. Definitely jump over there. Not right now. Not right now. Don't leave us, but definitely go check it out. Go check out their YouTube. Go check out Jordan's adventures. It's got a trader's way to better prosperity. We'll cover that in a sec as well, though. I'll just finish saying hi. Dinesh, Sage, Safraz, okay. Divine, how are you doing? Silvetta, how are we going? How are you feeling today, Anastasiia? A little bit better? Or?
Much better. Much better. Yeah. Yeah. Yesterday was horrible. I don't even remember last time, to be honest with you, when it was like this. But after lots of medicine, I'm better. My voice is still, sometimes I'm losing it, but it's better. I'm going to be able to join you guys today on the stream.
That's good. That's good. Yeah, I don't know if you can tell, mine has gotten worse today. I feel fine, like, as a person, right? I feel okay. But my sinuses are all blocked up now. I can't breathe properly. And I absolutely smashed a bunch of meds, right, to help dry that out. But now it's gotten worse as far as I can't breathe now because it's just fully just blocked. It's terrible. So I don't know what's going around. Apparently, we're all infecting each other through the internet, through EVMux.
Jonatan, the virus got so advanced that it's now getting spread by online.
Yeah.
You just talk with someone like this, and the next day you're sick.
Exactly, because Jonatan has been sick as well. Mark's getting sick now. Everyone's getting sick. It's ridiculous. It's like this might be a very obscure reference to some, but it reminds me of the Digimon movie. Actually, basically, the virus that goes in the computer. Anyway, some will know out there if you're born in the right time, and you're Pokemon Digimon, you'll know what I'm talking about. So
slightly older, LJ.
Hey.
Slightly older.
Oh no! Hardly. Come off it.
No, I mean,
I'm still 12. Sorry, guys, I'm still 12.
16, maybe.
I'll grow up one day. Not today, though. Apparently. So thank you for making it today, though, Anastasiia, keeping me comfy. So.
No, thank you for letting me yesterday rest, because honestly, like what you said about drunk driving the chart, this is exactly how I felt. I was looking at the charts and it was all blurred. Like, what is happening?
No, exactly. I could tell, because you can tell, yeah, when you're a bit under the weather, but you're still like okay, and other times where your brain's like, huh? What's going on? Where am I? What day is it? What time is it? Yeah, exactly. So let's punch a little music in the background as well. What one do we have? We don't have the same music set on here as we do ABL, but that's all right. We'll find something. That'll do. Alrighty, let's jump over to the charts now as well. Have you had a chance to look at anything today so far since you're out? I assume not.
Okay. No, not today yet, because I was taking some rest. However, yesterday I took one trade in the second half of the day. Half that, but it was a successful one. I took gold buy and I closed it and went back to rest, actually. But it was perfect.
Good. I need to be feeling,
like peacefully. You're just so dead that you take just one trade and it's like it's enough. That's it. No chances of overtrade.
Yeah, sometimes that is the best way to do it. You just them out. Okay, day's done. Walk away.
Yeah.
Happy day. So, Well, since Ahmed's asking to start with gold, so I guess we can do that. You also mentioned gold. So during the stream yesterday, after you left, this was the channel we were playing around with. And after I was speaking with Jonatan and Mike, and then later with Will and Erin, we were looking for basically gold to play out through this channel. We got this triple bottom through here, and then I was seeking a rise to the top of that channel again. I assume that's basically along the lines of the trade that you caught. We pulled right up into that channel, grind along there, come back to the midpoint. We were talking about this in ABL just now, looking for that move back up to the top of the channel about 3,400, and then see where we play out there. So is that roughly what you caught yesterday? I take it.
That I caught, yes. Yeah, exactly. From this, which time frame is this you're looking at?
That was a 15-minute there.
Okay, so the movement that I got was this one yesterday. So we're getting out of this channel. I took it from here to here, basically. Mm-hmm. And that was it. So that's where I closed it. No, I'm lying. I am lying. I took it from here to here because that was a big volume cluster here on the futures chart. There was a big volume coming in the market here. The test of this is big volume. It's not visible on TradingView, but it was a test of this big volume, and I got out here, and that was it. Yeah.
Brilliant. Oh, is my laptop going to
turn? That was my own trade from yesterday.
I mean, that's pretty solid trade. As far as one trade, if you had to take one trade, I mean, you've got a banger right there, and right by that bottom, right where we just completely just came out the gates, all the way up. So yeah, brilliant.
I do have the area of rejection that I'm waiting for gold from 3460 to 3468. 68.2 indeed. So this is the area that I'm looking for the price to potentially come here in the reject. And the other area that I'm looking for the rejection from is 3490. Yeah, 3490 to 3504. So it's 3490 to 3504 right here. So those are the two areas that I'm looking for the price to reject from and get some kind of reaction potential, some short entries as well. So that is something that I'm expecting for today. I still think that we're going to go up for approximately 50 ticks or something to the upside from here. Mm-hmm. So, and then in this area, I'm expecting some kind of pullback to happen.
Yeah, because this is the next thing I was going to ask. Like, yeah, what do you think about our chances above that 3,400? It's been very thin air, the past number of weeks, months. So, do you reckon we're likely to see another failure in that area, at least for now? Some sort of pullback following that, or?
To be honest with you, I'm not really expecting the long-term reversal from here yet. I don't see the reason for this so far. We do have data on the pending home sales and the GDP coming in later in the New York session. The only reason I'm looking for the pullback is just purely technical here. I'm more expecting some kind of reaction, and then if it breaks through, the next target for longs are going to be here on the all-time highs for the futures as well, and this consolidation here, this volume that was traded. But I am mainly long, and to be honest with you, until the end of the year, I personally expect gold to be on 3,600, 3,800, or maybe even 4,000. So I don't see the reason for gold to fall until the end of the year. I'm expecting more on the upwards movement. I've been on this bias since April, I think, or March, something like that.
Yeah, so similar deal. I mean, I was looking for 36, 37. I think we'll stop short of 4K. Just, I don't know, spacing out some of the, the fib levels, that kind of stuff. Yep. It's in somewhere in the 39s. I forget the exact level. I was willing to change that view coming into the year end if we did end up getting that sustained sort of selling pressure around that 3,200 area. And the Trump tariffs and everything alleviating themselves. We've gone back and forth with that spruce gold to come rise back up, as well as some of the obviously concerns around Trump getting his fingers in the Fed now. So I would start to lean more that we do get that sustained buying pressure and at least have an attempt at breaking to all-time highs
Yeah.
for sure. So
What I wanted to essentially show is the cumulative delta. It's not 100% correct on TradingView, the calculation, but still the direction is quite visible. So what I was looking at, and the reason I'm looking for the long on gold for midterm and long term, is a cumulative delta divergence. Cumulative delta calculates the difference between the market sell and the market buy orders. If the cumulative delta essentially is dropping, we have the majority of the market sell orders coming in the market. If the cumulative delta is growing through the time, it is showing the majority of buy by market orders coming in the market, right? Bigger than the amount of aggressive sell orders. What we can see then from the moment the price created the all-time highs here in April 2025, the price had stalled, so there really we've been ranging, so we didn't have any breakthroughs through this in either direction. But cumulative delta since that moment started dropping. So what I was looking at for the past weeks already and a couple of months, that cumulative delta, if it's dropping and the price is ranging, it's usually showing the absorption of the sell by market orders. So there is lots of selling by market, aggressive selling coming in the market, but despite that, the price isn't dropping. It's being held in the same range, which means that right here we have an absorption, right? In this area, we have an absorption of the sell by market orders by the buy limit orders. There is lots of pending limit orders that are absorbing sellers' activity and not allowing the price to drop. And that's huge volume because it's calculated in months and hundreds of thousands of contracts at this point. So right now, what we can see is that the price, the cumulative delta trend. So coming back to this point, so if the price is consolidating, cumulative delta is dropping over time, it's essentially showing the likelihood of the reversal to the upside, because it means that big market players, market participants, are not allowing the price to drop. They're holding the price, absorbing sellers' activity, and they are aiming for the price to go higher. So what I was waiting for the trigger for long-term buys is a break of the downwards trend on the cumulative delta. So this is the first time that cumulative delta since April is creating the upwards trend. So this is the first time. So since this moment, I'm actually expecting gold to continue to go higher. I'm not really expecting majority of drops happening anymore on gold.
yeah.
To be honest.
Yeah, definitely. And yeah, basically what that means, I guess, right? So another way, or adding to what you said, is that you've got buyers and sellers both competing. These sellers are now sort of somewhat getting trapped. So eventually they're going to have to be forced to become buyers. Therefore, you've got a net up, total buying pressure within the asset, right? Because I've basically seen the same thing on, say, the indices through stocks, S&P, the NASDAQ. There's still a lot of major firms, institutions trying to sell or hedge out or short certain positions, and they haven't fully participated in the rally. And yet again, they're getting trapped. So a lot of people have been calling for that sort of a dip, a retracement, some kind of downside impulse, particularly with everything going on, and just hasn't played through. So that tends to set itself up as like a powder keg, right, that gets ready to explode and then runs the market substantially higher. So I'm seeing a similar deal in on the indices in the stock market as well, that we could get a very large impulsive drive higher, which to catch people off guard. I think that would also normally, gold and indices would go kind of opposite of each other. I think it'll actually lend itself to gold as people then further look to try and price some kind of a hedge or protection to that excessive rally in indices and risk assets as well. So I think they're both set on a good trajectory overall. So yeah, I would agree.
So this is this is still the CFD, the spot basically on gold, right? And we can see, I don't really like analyzing the spot on gold specifically, but even here we can see the same trend. So we still see a little bit lower diversion, but even here there is a divergence between the cumulative delta and the price.
Mm-hmm.
So overall, I'm really, really expecting until the end of the year to see gold on the all-time highs at the very least, if not much higher than we are right now.
Mm-hmm. Mm-hmm. Agreed. And yeah, the CFD price is always going to have more skew in it
Yeah,
because you don't get a total data picture, right?
yeah,
It's
absolutely.
going to depend on the feed and all that kind of thing.
Yeah.
So, okay, then for everyone trading gold today, as far as like intraday, as we are approaching this 3,400, you were saying you've got some points just above where we are that you'd be looking for a bit of a, I guess, call it a pause point before that extended run higher.
Essentially, this is from $4 higher than this, so let's say 34.04, and until where we are. If we are talking about CFDs, right? We're talking about spots $12 higher than the current level, so 34.12 here.
Okay.
So that's the area that I would be looking for the price rejection.
Mm-hmm. Brilliant. All right. Well,
Right.
there you go, guys. We've basically we're both seeing a interim top somewhere around here, at least near term. Probably got a bit more height in it. We've now pushed the prior highs from yesterday. We're pushing the edge of that upward channel that I highlighted to you guys just earlier. So yeah, keep an eye out for one of those sort of fake out breaks on gold where you break higher. It's very short lived, pulls back in. Um, gold does gold things. Just
Yeah.
keep that in mind. Hey.
Yeah, I wouldn't be expecting the long-term reversal here, to be honest with you. One of the areas that I would be looking for the price to pull back towards is a previous consolidation here that we created
Yeah.
during the Asian session and the market closure here. So, and the maximum I would be waiting for probably to come back to approximately similar levels as yesterday, a little
Yeah.
bit
I
here,
agree.
and then that's it. That would be my main objective, I think, for gold. So, there's some kind of reversal here, pull back towards the previous volumes, towards the previous highs and accumulation, and then continue higher.
Yeah. Definitely. Have you had a chance to look at anything else today? Yeah.
Not yet. Just looking at
Yeah.
it today
Okay.
with you.
All right. We'll run through them then. We'll run through Euro then first. The big guy in the FX space. Where's my screen share's up the top now.
Have a
Okay,
look at
cool.
this.
So, EU yesterday, if you guys recall, when I was on with Will and Erin towards the end of at least my portion of the stream, sort of mid to late stream at the time, we then overshot Friday's low that we created just before Jerome Powell spoke. We come off the whole day. I was seeing this as a bit extended. One, in terms of the ATR, the primary push seemed to be from the differential in short and long end bond yields between the US, Europe. Basically, the US was outperforming all the majors and pushing everyone down. Given the other surrounding fundamentals and the uncertainty we still have with PCE coming out tomorrow, we still need to get through the jobs number on Friday next week to really confirm the position for the Fed. I was seeing any price action beyond here as a bit overextended. If you guys recall, looking at the technical picture, it was looking pretty grim, as though we'd see a continued run after breaking that low right down to about 115.30 or so. But that was just looking a bit too much, right? And we've had this kind of peculiar, a bit exaggerated price action in the past 2 weeks now, all through last week as well, and a number of the days prior to that from 2 weeks ago. So made the call on that just before I jumped off stream. That ended up playing out very nicely. We retraced. We then also had some of the US bond auctions, which did come in lower, and that further helped price to shuttle right up to these highs. So that was a very nice return reversal. Just like we hashed out on gold, we did get the same thing with that triple bottom there. Edge of the channel, ran up to the top of the channel. We touched on that already. If we go to the pound, same deal last night. Returning obviously dollar selling across the board. We also had that on dollar yen right now. Last night, also coming off. So just earlier, I was talking on ABL as far as we now go over to the Dixie. When I was talking there with Mike, this was the level I was looking for us to retrace up to. We have basically touched into that area here, started to pull back already. So that lined up essentially with the 200 here on the euro. We go to the pound. We had this cluster here within the 100 moving average, a shot over that wick there from earlier in Asia. And then at extension, you got the 200 there, because obviously the pound does sometimes move a little bit more aggressively than some of the other majors. So we have had that slight retrace in the Dixie and now pulling back down. It's going to be that question of, do we then continue this, run through these levels, go for yesterday's low, and then tonk on. So what we can see right now, if we go back to euro and analyze just the current structure, you're getting this sort of portion forming through here. You've got a rough channel through there. We're going to have to see some kind of break beyond that just now to actually get further confirmation of the upside. I would probably be leaning to that upside bias, just like we have in gold. We've probably got a few legs higher. That seems to be the overall lean that we have now going into the end of the week. Typically, most months, end of month, has a somewhat net US dollar positive position from institutions. We have seen some of those flows come through. However, a number of banks have put out reports saying that we've actually, coming into Friday, complete end of month, there'll be a slight net selling of USD. So obviously, after driving back down from the impulsive run that we had from Jerome Powell last Friday, a bit of US dollar selling on the cards is not a bad move. There you go. There's the 2 cents.
Really? You're looking for a sell?
Of USD.
Ah, okay.
Yeah, not of the euro. Not of the euro. No. Selling the dollar overall. I think we played out a lot of that move yesterday. We're coming somewhat back into this sort of mid, if you want to call it the mid section, from Jerome Powell's speech, as well as the prior price action leading up to the speech, right? We've kind of got this range from about 117.40, and then down the bottom here, call it 115.70, 75, right? So through that's 160 point odd range. So you go this plus 80, we're kind of approaching that area now. We've probably got another 20 points or so to get up into that 116.60. I believe when you zoom right out, if I do it on this chart, I'll have to find another chart and show you guys because I've got squiggles all over. If you go from the lows we had earlier in the year to the peaks, 116.60 is one of the fib levels as well. Well, I'll find another chart that's clean and put that up there for you guys. But yeah, thoughts, Anastasiia, whilst I do that. I think you might be muted.
I am.
I should have just let it go on for for a while and just,
Very funny, very funny. Thank you for not letting me do this. So I was expecting EUR USD to go towards this area actually, or volume maybe slightly lower. It did touch it with a tick and then pulled back to the upside. I am looking for the longs on EUR. That's why I was a little bit confused when you were saying about selling, but it makes sense. So yeah. I'm expecting the continuation to the upside on EUR today. The high risk entry for me would be right now, because we just tested the weekly point of control once again. There is a margin zone right here that is holding the price currently as well for me. So there is the reason for the price also to go higher back. We do have the volume right here from the contract, which is slightly concerning for me, but majority, like majorly, I'm expecting the Euro USD to come back here towards 16,990, 1700, 17,190 within a day, probably. If we're gonna get also the data that is gonna be aligned with it, which I'm expecting currently too. So I would be expecting Euro USD to go back towards this range today. So
Wait,
perhaps.
so what level is that? Sorry, I was trying to put this fib on another chart, trying to find a clean one. 116.80 or so.
116 and 990 towards
Oh,
17.
no, okay, yeah. Agreed.
Yeah, so that's basically what I'm looking at here.
Very good, very good.
I am. I'm still not taking the entry because it's kind of on the volume on the futures chart.
Mm-hmm.
Uh, that would be a really high risk entry for me because I'm also looking at there is a stacked imbalance on the 5 minute time frame. So probably I would want it to go higher and then catch the continuation of the move instead of entering right now.
That's fair.
Are you looking for the buy right now already?
Not just yet. I would have preferred it 10 points lower when we were about 116.30,
Yeah.
where that cluster of moving averages was. I jumped in on the Aussie dollar earlier already, so I didn't want to add just yet. I felt the Aussies had a bit more resilience overall, and we did crack the
Yeah.
high from the other day as well. So I want to see if we can sustain that a little bit for the time being. So I'm just taking a second because my trading view skills are horrendous.
You're doing quite good with trading, okay?
I'm getting there. It's just some of the small bits and pieces here and there. I'm like, wait, where's that thing? And that, or a lot of the menus are very similar to other platforms, right? There's some sort of homogeneous, I guess, layout, but some of them are very different, and I get lost trying to
You
find
see,
it.
that's while you're figuring it out, that's the reason I'm not yet looking for the buy on Euro USD. Like I'm looking for a buy, but I don't really see the entry yet because on the 4 hour time frame we did reach this big cluster of volume. We rejected it second time already, so that's what I was also expecting. But right now we are approached the point of control of the month. We're in the end of month of August. The majority of the volume throughout this month was traded at 16,650. And as we look for the 4 hour time frame, we can see the rejection on 16,650 right now. So
Yeah.
the price has been having difficulties breaking through this level yet, which is obviously I want to see the opposite when I'm taking a long position.
I'm going to give up on this. It's annoying me now. My charts started playing up. I don't know why. Everything got deleted. I think I deleted it myself accidentally. Oh well, that's right. We'll deal with it. There we go. Okay. Next, pound then. Ideas on pound, obviously being similar because a bunch of the guys asking about pound, and then we also did have pound yen. And Akram's also looking at what's this? EuroCAD. We can do EuroCAD. EuroCAD first, and then I'll jump over. On EuroCAD, kept punching lows 1 hour, but no follow through. Could be short squeeze to the upside of it. Let me go to the 1 hour. I mean, I would say I would be cautious in shorts, definitely. Just looking at the 1 hour on the face of it. Go to the 4 hour. My point of concern, the 4 hour still looks very very heavy, put it that way, and probably want a return to that 200 moving average here. You see the S2 there, and then of course that's in the band of price action through this block here, right? So I'm sure if you put one of the volume indicators through here, you'd find a large band of volume coming through the center of this distribution. So I probably wouldn't be punching the longs on EuroCAD just yet. I'd probably just sit and wait for that lower band first, Akram. Because I think that's very achievable. It's only like 20 points away. See if you can get that 160.20 and then try and reverse this guy. So yeah, I don't think this is out of the woods just yet at all. So I'd be very I'd be cautious still. I think there's more in it for us to come off. Like all the moving averages still run down. We haven't been able to have a bar, like a candle close above the 10 moving average, for instance, on the 1 hour. So typically what you get is that price basically riding that 10 moving average on whatever time frame you're looking at, and before it completes its move, ride all the way down. Then you got to get above it, get a close above. It then normally starts the next candle, pulls back into the 10 again, but now that ends up being like a cup. Rest on that 10, you've seen a clear price shift, check the volumes, everything, and then run higher. Hang on, sorry, I need more water. More hydration. What was the other piece? Pound yen.
I'm expecting in general right now I'm selling USD JPY. So I haven't looked at pound yen today. But would be expecting something similar.
Because, yeah, I mean, immediately off the bat, I would look at this chart on the 1 hour and just see that sort of wedge forming through there pretty clearly. I would say the other yen crosses definitely have a bit of a different profile right now to the dollar yen, of course, and that's played out for a number of weeks now. They keep going back and forth between being in sync and then out of sync due to that USD specific component. So out of any yen crosses, those other crosses outside of the US dollar are probably going to be your best bet as far as any kind of bullish activity. The dollar yen very much is starting to face the unwind of the carry trade. And there's been a lot of bank reports through this past 2 weeks of a lot of these people that have been holding these carry trades for years and years and years now, starting to go, hey, start to filter me out, right? And that's why every time we do get these sort of drives up, we've seen again and again and again, everyone knows where we're going in like a year or so. We see these very impulsive sort of, runs up, break down, and then we start climbing up again. It looks as though, okay, we're going to get, dollar yen running back into the 150s or something. You get quite a substantial move up, and then boom, 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 boom. We just get smashed lower. And so those players seem to be using those rallies very heavily as liquidity to just exit their long-held carry trades. We've seen that again and again and again, and it keeps failing just before critical points. So yeah, I would definitely be short dollar yen. This is also the long-term trend line. This is going to get a bit messy. Let's remove some of this so we can see this a little bit better. You guys don't need to see the exact bits and pieces on the chart, but just note this trend line going up through here. So we're now zooming out months, right? So this goes right back to April. Okay, so this is the trend line that we've tapped into numerous times, and it's basically what has held up the dollar yen as far as collapsing back into the low 140s and then eventually into 130s through here. So we're now we've had a few touts when there's been a bit of a shake around with Trump or Powell and rates and the jobs numbers, that kind of thing, it appears as though now we are starting to establish more of a underside of that higher wedge. So we're going to the underside of the wedge, ultimately then drive back down to the lows down here at about 140, and then at some point come right off into the 130s and below. So that very much seems the trajectory right now. And as that carry trade continues to unwind, this will accelerate, and go faster and faster. So give me 1 sec, Anastasiia. I'm just going to get some more fluids.
So let's cover the dollar yen in the meantime. So I'm actually having the sell position right now in the dollar yen. Well, technically I'm buying the 6J, which is the JPY futures. So that's the opposite correlation, negative correlation to USD JPY. The reason for this is that we are, well, technically we are ranging, but if you look at the high time frame, what we can see, we had a huge fake out of this range. So on the 4-hour time frame, we had the range forming since the mid of July. We had the fake out, the collapse of USD JPY of the dollar right here. We've never been able to break through 148,700 ever again since that moment. So what we can see now is on the 2-hour time frame is clearly seeing that the price had come back below once again, 147.7 and 147.4. Those are two big high volume nodes at the middle of this range as well. And from the lower time frame, what we can see is when we came below this high volume node, we tested it and we started falling back. So my entry right here was right here for the USD JPY for a sell. So I'm expecting the price to continue lower until the bottom of this range on the 4-hour time frame as well. So I'm aiming at least over this previous lows and perhaps coming back into the same area that is yellow color for me. So that's 146.2, 145.8. So that's my current USD JPY projections. So technically from here towards those two areas. So I'm still waiting for the continuation more to the downside, which makes sense with EUR USD because I'm looking for the EUR USD to go higher. But yeah, I'm still waiting for this entry here to get confirmed. But USD JPY for me looks completely bearish actually. So that's running already for an hour.
Agreed. Sorry, guys. You'll have to put up with my throat and everything is so dry. I think I actually took extra medicine to try and okay, that'll make me good. I think it's worked too well.
Too well.
Yeah, I'm bone dry now through.
Yeah.
Yeah. Anyway.
Yeah, I'm still having my voice completely down as well.
It's all right. We got a good setup with two.
Yeah, there's two of us.
Two sick people. Yeah.
That's a good combination. I did highlight the comments. I'm gonna go over them.
Yeah, I was about to say I saw that. Yeah.
Yeah. What time frames do you plot volume profiles for your trading planning? It depends. So I normally go over the weekend and plan my bias for the week. So then I analyze the weekly, the daily, and the 4-hour time frames and how the candle closed on the 4 hours on the daily and weekly, comparing to the big volume areas. So if the candle closed, for example, the week closed, the day closed above the high volume nodes, the high volume zones, then I'm going to be looking for the long bias for the next couple of days per the next trading week. So it gives me an opportunity as well to not think every single day when I wake up, okay, am I going to short or long this? I know that my bias is long, and within this bias, I'm looking for the entries, which makes it completely different than if you wake up and you're like, which direction is the price going to go today? So for the weekly planning, I analyze it on the weekly, daily, and 4-hour time frame. And within a day, I analyze it on the 30-minute time frame and 5 minutes for the entry confirmations on the footprint. That's not only the volume profile, that's also the order flow, the cumulative delta, the stacked imbalances, the clusters within the footprint as well. So that's more of an entry timing and the confirmation, the moment. But answering your question, weekly, daily, 4 hours during the weekend. During the week, it's 30-minute time frame and a combination of 5 footprint.
Very good. Very good.
There were a couple of other questions that I was highlighting as well. So yeah, so that was a view on the USD JPY. I did save this comment also to go over it, so I'm completely bearish on this one right now. So I think we perfectly tested also the volume profile of the point of control of the week right here. The majority of the volume at 147.300. We clearly see the big volume area here. And if I'm placing my volume profile over this whole move to the downside, the majority of the volume was also right here. We do have the reason for the price to pull back from the same low again from 146 point, well, basically 147, because right here is a value area low. We see that the price has been testing this lows already for quite a while. So I'm expecting the price to potentially pull back from here as well. Or eventually, if we're going to break through this, I'm going to add to my sell position for USD JPY as well. So I'm going to scale into the running trade. But that's my opinion on USD JPY today, which aligns also with your perspective on the pullback on USD today, LJ.
Yeah, and this also comes further into those the options trades that set up with Dirk a couple of months back that he priced out to about this period that we were looking for somewhere through here for dollar yen to ultimately fully start to tumble and that begin to accelerate. So yeah, I think we're finally getting that move along for this next dollar leg down. It probably won't just be one straight picture because we are starting to get that idea sort of priced in to a degree. Similar how you're talking about, gold when you're getting the difference in the delta. Obviously, if everyone can see this sort of coming now, we know what the general direction for rates are. It starts to slow down because people are going back and forth. People are kind of already in the trade, but I think we do have some of those legs, especially for UJ, where that unwind of the carry trade is going to assist that trade there. So Henry was saying before, yeah, careful my drawings. Yeah, I know. Some of my drawing. It's all right. It's all right. We've not done anything dangerous just yet, Henry. We're keeping it clean. No accidental mistakes yet, but we'll see. Kavika, how we doing, mate? How we doing? High five, brother. How we going? Aditya asking you, Anastasiia, EU and GU looks good for longs as DXY can drop further from here. I mean, that aligns with what you were just talking about, right? So
Yeah. I'm looking for longs on Euro USD. So this is Euro future. This is 100% correlation with Euro USD. I'm looking for longs. The reason I'm not yet entering long is because we are quite in between the volumes. So that's not 100% something that I want to trade right now. I'd prefer to see the price breaking through this, closing higher than this current wicks, because before we were only having wicks coming above this level. So I want to see the candle closes probably on the 4 hour time frame above 116, 670, then the pullback and then the continuation. So something like this would be better in my personal perspective. Taking a loan entry right now is an option, but it's a high risk trade, so I'm not personally taking it right now. If we are talking about the GBP USD, so this is 6B, which is a correlated asset. This is a pound futures. So the similar situation. So we have the test almost right at the previous volume areas, and we are right now right below the volumes. This is also the daily point of control. So we didn't break the majority of the volumes throughout this current day. Is also traded slightly higher than the current price, which also is not my entry that I'd love to see yet. So similar situation as a reUSD. I am long biased. I'm not yet buying it because I want to see something like this. So I'd rather take it in the like when the move already started and get confirmed than trying to bet right now that, hey, this is already happening, because I can possibly also see the pullback yet to the downside, and then also the continuation, which I don't want to be in the drawdown. So I'm going to be waiting for the momentum to start pushing the price higher. Maybe in the New York, when we have the GDP data, the unemployment claims, and and also the housing data coming out, depending on home sales we have today. And then perhaps in the middle of the move, I'm going to be catching the continuation. So that's that. I personally think that the continuation kind of trade here today is better than the trying to catch the reversal.
I agree. So I'll show you what I'm seeing. So from the Dixie standpoint, similar deal. So we got this move up into this general area. I was talking about an ABL. We pushed down. This is that first point. This comes back to some prior levels through here. We slightly over touched that. You've now got the low from earlier on. I think we need to see a move back. We've broken this higher structure through here. What we'll do, we're going to change this color so that you guys can see it a bit better, since we've already got a bunch of lines. What do we do? Let's do this kind of blue color, baby blue. That'll work. Okay, cool. So we've got this this structure that we've now sort of broken the lows through there. So I want to see us pull back up into these moving averages and get some kind of failure candle in here. It's basically like a break, retest, and then keep going. So similar to what Anastasiia was saying, we sort of top somewhere around here, have a slight pullback, and then run on from that. So if we go over to Euro, you can see we're now pushing that, my good old freehand channel from earlier here. Get a slight sort of tout above this. I would see it probably fail that, or else we fail right here at the channel, pull back into the center point, and then start to run up. So yeah, I would indeed agree. We've got Aussie dollar. So this was the Aussie dollar trade I was talking about before. That was the one from last night, of course. This is the one from just earlier. Coming into London after end of Asia, we started to pull back. Early London started to consolidate this higher zone. Picked up another entry through here after we weren't further collapsing. And we're now just by the target. I'm like, 2 pips off or something. So similar deal on this. I'll be looking for us to sort of probably pause here as the euro makes a slight pullback, come down to here, and then see if we can take a further run up on the Aussie as well. However, Aussie's already been a bit stronger. It's consolidated this high area. From here, the next trader probably won't take it on the Aussie as far as total pips, the total movement that will travel. I'll probably then go over to the euro and look to take the trade on the euro for some high move into this top cluster. So first point will be 116.70 and then up towards 116.95 and see how we fare around there. So there you go. Hopefully everyone's starting to get used to my Picassos. Look, it's an acquired art taste, but that's art for you, right? It's all about it's subjective opinion,
I love it. I also prefer to draw like this in my charts. They also have some weird drawings always.
Yeah, I mean, you're drawing trend lines and structures or whatever. You're just trying to get the general gauge of where prices, oscillating and reacting in, right? It's not. This is not a science, right? We're not, it's not physics over here. So
that's not a rocket science. Yes.
Yeah. Henry's one of my first buyers of the Picassos. Got him locked in. He put up a bid the other day. So Henry doesn't know it yet, but he did. I've accepted his bid before he's put it up. So there you go. What is the first word? I don't believe we have the first word yet, guys, unless I missed it somehow. And Jonatan's been in the background here sneakily, but I don't think he has. So there's not quite been a first word yet. So don't worry.
There is another question.
We'll get it.
Yeah, sorry, DJ. Yeah. Go ahead.
No, you go if you want.
Alan is asking, what is the difference between the ticks per row and the number of per rows on the FRVP indicator on TradingView? So if we go on the VRVP, one sec, let's go on this one. Nope, on this one. And it's gonna load, perhaps, maybe. Come on. No? Let's, don't know what's suddenly happening with TradingView.
That's
Refuses
what I.
to load my.
Hey, look, that's the trouble I was having before trying to draw up my other stuff, and I gave up. I was like, why is this not working properly?
Weird. But anyway, so on the VRVP indicator, there we go. Finally, it got it. It uploaded it. And just make it a little bit brighter. So on the VRVP indicator, if you go to the settings, you have the choice between choosing the ticks per row and the number of rows. Now, correct visualization would be the ticks per row, because it's essentially the amount that for every tick, which is the minimal change in the price of this specific asset, you're going to have a separate row showing the amount of volume that is traded on this specific price level. So that's a correct visualization of the volume profile, which is supposed to be showing you every single tick and the distribution of the volume, the summary of all asks and bids per every single tick. Right? This is a correct one. Now, the other one is going and choosing the amount of rows instead. So if I go and I place a 3, I'm only going to have the 3 blocks of the total volume. So that's the difference. So instead of representing it in every single tick and the amount of volume that was traded at a specific price level, it's going to show you the amount of rows, so blocks of volume. And the more you're gonna put, the more of those you're gonna put, the more detailed the volume profile is gonna become. So right now we have 30 blocks. Right now we're gonna have 300 blocks, for example, of volume. And the high number you go, obviously the more detailed is gonna show you the levels, right? But the correct representation is 1 tick per every row. So you choose the ticks per row, you choose 1. The only difference is that for some assets, specifically also for CFDs, for spot, for Forex, it's not correctly calculated. So sometimes TradingView is not going to be able to load the data. It's going to give you the errors. It's not going to work properly. And then you can choose a number of rows instead, but put it as high as possible to have the smooth visualization of the volume profile. So if you put the number of rows technically to, let's say, 1,000, it's approximately going to be the same as if you put the ticks per row, 1 tick per every row. You know, the whole objective is to get the smooth visualization of the volume profile so you can see clearly which zones and which levels had the most volume traded and the least volume traded, so you can analyze the interests of market participants to the specific price levels.
Beautiful. Beautiful. What about this? Do you want to take a shameless plug, Anastasiia, for anything?
You're working on this with Mike.
Yeah, but you got some stuff going as well, you know.
Nah, it's okay.
Okay. Look, so yeah, if you guys want to jump over to ABL is wrapping up this week. Tomorrow is our final day, and we're going into phase 2, so it's not ending. But tomorrow, in its current form, will be the final day. We are going to post some extra stuff for, you know, there's a bunch of you guys that have been wanting to follow on with some of the other things we've been doing, plus a bunch of the other members in the community. We're trying to put together something else, some kind of little home for you guys. So definitely go check out the AlphaBetaLab.com. It'll be around for today, tomorrow. That's pretty much it, and then wrapped up. But there will be some posts coming in through there where you can sign up to some bits and pieces. Won't cost anything, you know. Just basically, we'll drop all the links and stuff. They'll sit dormant for a little bit, but we'll send some updates and let you guys know what's going on, because you guys have all been asking constantly for something beyond ABL, right, to continue what we've already got. So we'll try and put something together with that, with myself and Mike, and maybe a few others that want to join the team as well. And yeah, there you go. Also, Akram, don't worry. You can have the Bart Simpson one. I'll get that to you. Don't worry, mate. Don't worry, mate. You'll get that for sure. Hey, I mean, there's a fair question from Manish. What about that, Anastasiia? Huh?
1 second. Guys, I have a call with the boss. Unfortunately, I can't right after our stream.
Of course. It's always something, isn't there? Always something. You know?
There is.
Gosh.
Life never stops.
Anastasiia just doesn't like us, guys. Sorry.
No, guys. I don't like you. I love you guys. So.
No. You like everyone else. You like chat. You just don't like me and Mike and
No, don't make it up. Don't make it up.
Right.
No.
You're putting up with us every time we're on stream. We're just dragging you down the whole time, right? You're like, these guys again.
Absolutely not. I really wish I had more time than 24 hours in a day, to be honest with you.
I know, believe it. Look, myself and Mike, believe me, we need not just 36, we need like 48 hours in a day, honestly. Gosh. But yeah, Zix, very sad day, isn't it? I mean, cat tears as well. Yeah, no worries, Akram. No worries. Divine Trader, ABL is the AlphaBetaLab.com. It's basically a platform we started as a pilot. It's going to have a bunch of educational resources for you guys, in-depth stuff for trading, right from beginner stuff, things with technical analysis, market 101s, all the way to higher level institutional type grade education. So we're talking about your basic stuff on the charts, how to read a chart, how to get into markets, how to buy and sell stocks, right from that stuff all the way to your higher level things with algo trading, integrating complex mathematics with options, all that kind of stuff. It's going to be the full spectrum, and also alternative assets, not just FX, commodities, indices, going to individual stocks, options, like I said, futures, even going into things like real estate, art markets, alternative assets with that sort of thing. I don't know, whiskey, wine, Pokemon cards, all like the whole boat of every single thing out there that you can think of. That's the ultimate piece there. So right now, we sort of ran the first sort of version with the community and everything, and had a few people contributing and the lot. We aggregated a whole bunch of you guys. I think we got 1,600 odd members of you guys there, and a bunch of people contributing courses and all sorts. Now we're going to phase 2 to build out the platform more in depth, because the current other platforms that we're using don't quite fit what we need for the future. So stick around, keep an ear out. The name will be changing as well, but don't worry, you'll find out more. So there you go.
You're still going to be hosting the podcast?
Today, yes. So we will have the final ABL podcast today with a bunch of the guys later on in the stream in about 2 hours from now, and that will be the final ABL stream on the 5ers.
Wait, how is it 2 hours? 1 hour from now, right? You have it right after our segment or later?
Yes, so 1 hour from now. 1 hour. Yeah, no, you're correct. I got the times wrong. Yeah, 1 hour from now. That'll be the final ABL segment for the 5ers stream. And then we are gone. We will have another 5ers stream and possibly an extended stream with a bunch of fun, maybe some giveaways, some stuff. We're sorting that out tomorrow over on the ABL YouTube with myself and Mike. But yeah, after that, it's lights out for the time being. So there you go.
Better things are coming.
Fun. It's been fun. Thank you guys, for joining us and contributing and sharing. in the community. So
I think only better things are coming from here. So
oh, definitely,
this
yeah. It's
what
a
my net is.
yeah, it was a proof of concept. It's worked. It's good. There's demand, that kind of thing. So hence going further and further and harder into phase 2. So trading with Zion is asking, how did you learn about the footprint charts, Anastasiia? Where did you begin your journey with
I
that?
a couple of years ago I was looking for something else than what I was trading. I used to trade before the Fibonacci, the Elliott waves, and the price action purely on the NASDAQ and S&P 500. That's also the way how I got funded for the first time at that point and withdraw the first profits. And then this profits that I made, I paid for mentorship with one of the traders who was trading the volumes and the footprint because I was looking for something else. I was looking for something more because I was feeling like I'm missing the puzzle, basically for understanding the market better. And that was something that clicked for me when I understood the footprint. That was completely like it was my brain was exploding the first time I saw the footprint chart. I was like, what is that? Like what are those numbers, and hours of back testing and sitting in front of the charts. I was really cracking my head like over it to be able to understand it. But that was really a missing puzzle that I was looking for.
Mm.
So that's how my journey started with footprint and volumes, and then I went on, looking for more information, passing some courses, learning, testing, back testing, applying some things.
Brilliant, brilliant. Where if okay, you obviously then went through like a mentor and such. Do you have any other spaces that someone maybe who isn't in the position yet to facilitate something like that they could, I guess, get started if they were curious, or if you sort of just worked off what you learned there and not really ventured into that?
I mean, I have the free sources where someone can learn it, but I'm not sure I can mention it on this live stream. To be honest with you,
Oh, okay. Well,
so
you guys will have to do some hunting then, and you'll.
yeah, I have some free webinars even on YouTube. If you put the information out there, there are some webinars that are completely free and out there about the footprint charts and the combination of it with volume profile.
Oh,
And
yeah. No, I know what you're saying now. Yeah, I'm aware. I'm aware. Yeah, fair enough. Fair enough. Alrighty.
it's
Yeah,
free out there, so everyone who is really looking, they will be able to find it.
yeah, yeah. So basically, if you guys like, how do you learn anything these days? You got the internet at your hands. Open up Google, start searching. You got YouTube, you got Reels, you got a bunch of educational pieces out there. If there's anything specific that you're wanting to sort of start to clue yourself up on, just start hunting, guys. I mean, I will also say that's the way I picked up, trading, investing, that kind of stuff 13 years ago. And this was long before this absolute swarm of content was on the internet. That was when YouTube was still in its very early days. It was pretty much just, prank videos and cat videos and random stuff like that, right? All the way back then. Instagram Reels didn't exist, TikTok didn't exist. Instagram was a very different place then as well. Facebook was very different. All these social media apps and things were very different. So yeah, go hunting. You've got a absolute monstrous amount out there to teach.
Sorry, but I cannot not say it. That was a long time ago.
Yeah, well, I mean, hey, it was, but that's when you had to do the hard grip. Just like Logan's saying right now, that's not gatekeeping at all. Just look, it's not tough. You just got to go searching. Like you've got all the tools, right? And if that's too hard, then you're gonna have a very hard time even trying to learn this stuff on your own because
Yeah,
that's the easiest part, honestly.
absolutely.
So yeah,
Before I thought that everyone can learn trading. Honestly, I thought like everyone with the right effort, with the right and work ethic can learn trading. But then I realized that not really everyone can do it because if person sends me a message with a question that can be Googled or now ask the chat GPT, within 2 minutes time frame you're gonna get an answer. And because I have lots of messages, the person is willing to wait 2 weeks until I get back to them with an answer, then this kind of people cannot do trading, because if you're not willing to go out there and search the basic information that can be like found within minutes, and you're waiting for someone to reply because you want to put the responsibility of your own success and your own results to someone, you are not going to learn trading. So we just said there is free information out there. Just start somewhere, if you have zero knowledge, I don't like if you have zero knowledge about trading, or if you have zero knowledge about the specific topic, my personal view is that there is no reason to pay for the course or mentorship, because you don't know anything about it. You go out there, you find some basic, you build it up, and then when you have the information, some like basic stuff, the foundation, you know which questions to ask, you know what you are searching for and where you're going, then you go and find someone eventually that can direct you. But like the base, you need to go out there and do the work. You need to do the work anyway, but especially in the beginning.
Yeah, otherwise you're not going to be able to digest it properly, and someone can be saying information to you, but how it communicates and translates through your interpretation is going to be different. It'd be like getting Gordon Ramsay to teach you cooking, but you've never baked a cake before.
Yeah.
Right? Whatever he's going to teach you might be teaching you some really crazy high-level 3 Michelin star stuff, but you're just going to be like, okay, cool. I drizzle the thing on here and there's some olive oil and I got to put to the... Okay, what does that mean? Right? But if you've been cooking for a while, you're somewhat established as a chef, maybe an amateur, that kind of thing, and then you get some lessons from Gordon Ramsay, it's really going to elevate what you've already built on, right? So this is a constantly building, compounding thing with your knowledge. And that's how you learn. I mean, just think about, if you want to use the traditional outlets like school, you go through, I guess, preschool, primary school, high school, university or college, whatever, and then you potentially do other stuff. Like, there's a reason why it's kind of a step-toe kind of ladder, and every incremental bit builds on the prior. But if you just skip right to the end, it's not going to translate quite the same, right? If you're starting out in the gym for the first time and you got Arnold Schwarzenegger to teach you some stuff, it's not going to be as effective as just getting your personal trainer at the local gym. It's probably actually going to do more benefit for you than Arnold teaching you like high level tactics and bits and pieces, right? It's not going to hit the same. So do that first initial work, start learning, start getting the basics, the foundation, the fundamentals. You got to lay the slab of concrete first before you can build the house. And then once you get that that kind of level, now you can get an architect in, being someone to educate you in some more proper manner and build something beautiful. But without that foundation, you're never going to build something beautiful without that. So there's another comment somewhere. Now I've missed it. Wow, 13 years ago. But yeah, look, I was talking about Pokemon and Digimon before. I told you guys I'm still, 12 years old. All right, don't worry, I'm 12. And yeah, Henry, back in the day, YouTube wasn't swarmed with ads as well. That's another good one. Good morning, Imran. How we going, mate? Akram saying experimenting with ATAS to add some arsenals in his trading strategy. More info inside the candles is ideal. Definitely, mate. Definitely. Scrolling through, I'm catching up on chat, guys. Give me half a second. Yeah, Henry. Yeah, maybe we should, Henry. Maybe we should. But at the same time, then we're giving it away. We're giving away the source as well. On a broader spectrum of people, right? Because if this idea is good, then we might be just handing it off to someone. um, yeah, Kavika saying trader's job is to manage risk. Steven saying, yep, totally agree with you, both you guys. It's hard to reach someone with zero knowledge. Exactly. That's it. All right, I think I'm almost caught up. Internet is like cable TV now. Yes, it is. Just like Netflix, Stan, Prime TV, Apple TV. What are the other ones in different countries like Hulu and things? Paramount, whatever else you have. Yeah, it's gotten ridiculous, hey? I mean, this is I guess a follow-up question to what we were sort of talking about just before, Anastasiia.
Yeah.
So would you actually, you went and did it, but would you recommend it to others to go down the same sort of, I guess, direction that you did with your own personal path?
Again, it depends. Because if I would get a mentor in the beginning, I don't like I got people who were directing me in the beginning, but it didn't really give me lots of information. Like in the beginning when I was just learning about trading, I needed to go out there and search for information, Fibonacci, I don't know, the basics, Elliott waves, price action, price patterns, understanding this kind of things, and so on. So I don't think there is a reason to buy a course or to get a mentor for the basic knowledge. There is so much out there, and yes, it might be unstructured, but there is, if you look right, you're gonna be able to structure it yourself as well. And there are free courses on this basic stuff as well that you can pass. I think getting a mentor is really worth it in a moment when you're getting stuck. If the person already lost enough money, and the person is like, okay, you know what, right now I'm ready to get the advice of someone who is where I want to be. And then you go out there and you find someone and you follow, what their own advice, for example, the same way as traders at the desk. They are actually able, at the floor, they're able to get their own risk manager, for example, or they come all together, and they have sessions with also psychologists and mentors all together, because sometimes we don't know what we don't know. But I think there is only the reason to do it when you already have a base. You have missing points, missing puzzles that you're looking for. Some things that you cannot work through yourself alone, and then there is a reason to get a mentor, but definitely not in the beginning. Like if you don't know what you don't know, first like get some base in the foundation. Build something, some kind of foundation before paying someone X amount of money for this stuff that can be found on the internet. Some things cannot be found. Some things, as for example, we are blind to our own psychology, emotional aspects. Sometimes we don't see some aspects of our trading patterns, and we need someone to point it out for us. That's different.
Mm-hmm.
There is no reason to pay someone to explain you what is Forex, for example, what are the candlestick patterns, this kind of stuff.
I've got a follow-up question on that after, but I've just noticed a couple of people asking about news and that kind of thing. So I'll give a quick hash over that. So today, as far as news, we've basically got, for the US, at least put it that way, we've got week-on-week unemployment claims, and then we've got GDP coming up tonight. After that, we do have some of the housing index data coming out. So housing index data will start to be looked at a bit more for the Fed as well. They want to see how much that their basically their forward voicing of rate trajectory is starting to impact things like the housing market and mortgage market. There's been a lot of chatter around if all of a sudden that's going to accelerate home buying, elevate home prices, mortgages go right up at the same time they're reducing rates. It's going to change the dynamic of them actually putting rates down, because this obviously housing is linked to every single person in the country. Right now, we're not seeing some of those flows, so we'll talk more about that in the upcoming data. This data will also be a little bit delayed as far as the recent comments that we've had from the Fed. So I wouldn't worry about that portion too much tonight. GDP is still very much important. There's a bunch of inflation components and input costs regarding the tariffs and such that come through there as well. And the week-on-week unemployment claims are definitely something to keep an eye on, because we're now looking forward to the forward jobs number next Friday from now, right? So there's ongoing week-on-week unemployment claims are the highest frequency, most real-time data. They tend to have pretty good accuracy. So if we do see large shifts in that data, right now recently has leveled out, and I do expect it to stay there. But definitely keep an eye on any distinct shifts. Right now should be pretty reasonable tonight as far as the US data. The PCE tomorrow is probably going to be far more important for things. So yeah, today should be reasonably tame. There will be a bit of jostling, but the PCE is far more important tomorrow. My final piece as far as the mentoring, that kind of aspect. And I feel like only because this is like a, I don't know, I guess somewhat of a moral responsibility to certain people, because obviously that space is very, very full these days. It's very saturated. As far as your outlook, do you have any input to how people can find something more quality rather than someone just trying to rip a buck from people, put it that way? Do you know what I mean?
Yeah, I know what you mean.
Yeah.
Well,
I think that's a hard
LG, to be honest with you, I honestly think it's just common sense. Because if you look at someone who is extremely out there on social media and just super more creating a picture than anything else, if you see someone as, I'm very sorry, but if someone is scalping on the 1 minute gold time frame, showing how to flip accounts from like a, 100 to 1,000 to something, it's not going to be long-term sustainable. Like, you want to look for people who know how to manage funds, I'd say, whose main income is not from courses or from mentorship, but it's from trading. And I personally trust more people who are not bloggers in the first place, but traders in the first place. And then bloggers and salesmen on the second, third, tenth, not the other way around. It's very easy to buy a nice picture and the image, like flashy image right now. But I think honestly it's common sense, because if someone is buying like a course which is telling like with a headline, you're going to become a pro trader in crypto in 30 days from now, I mean, you need to understand that the person who is buying this course is trying to find the easy way to solve all the problems in their lives. We just had this conversation with a group yesterday that there is no one to blame in the shitty content online about trading than ourselves, because we are the ones who consume it, we are the one who buy it, we are the ones who try to find the easy way to earn hundreds of thousands of dollars. We are the one who refuse to put in the work and hours because it's boring to backtest, it's boring to go through your journal, it's boring to sit and learn because it's not so exciting as press buy and sell buttons, it's not so exciting as buy the course. Then it's gonna say do 1, 2, 3, and you're gonna make 1,000 in 1 week. So it's more easy to put on responsibility on someone else, buy this kind of stuff, and then say, you know what, trading doesn't work, trading is a scam, it's not possible to make money out there, because it's much more difficult to put in the work and to put in hours of boring work every single day for months or for years to actually get the result that you want. So there is no one to blame. There is a very bad content out there, bad promotion for trading than ourselves in the first place. And I think if someone is looking for really quality knowledge, it's just common sense. You will be able to see what is quality and what is not. As
Yeah.
long as you are ready to take responsibility on yourself and put in the work in what you're doing, you will be able to distinguish one from another one. But if you're someone who wants quick results, of course you're gonna get scammed. Like there is 100% chance you're gonna get scammed if the thing that you are looking for is to someone put the money in your pocket. That's basically my opinion on that.
Yeah, exactly. So, because exactly that. So, I would say, echoing exactly what you said. Like, if you see people and their sort of public profile is sort of more of that lifestyle content of doing flashy stuff and going to this Airbnb and wherever, and a penthouse here and a car there and whatever, and it outweighs the majority of the displayed content versus actual trading stuff. It's probably a clear indication, right? If this person is pretty much all trading, all theory, all knowledge, all that kind of stuff, and maybe occasionally they go like, "Oh, hey guys, I went on a trip to this place with my partner or something, and hope you guys are going well." That's just them being social and really and just being a normal human. If their entire thing is pumping you with this other like dream-like whatever stuff, it's probably nonsense. So that's a good immediate differentiator. Just for you guys not to get duped by some of this stuff, try apply it. You've spent a lot of money, and then you end up not happy with things, right? Because people think they need to keep going down that hole and it's their own fault. But take the time, just like we were saying, to take the time to work on foundations. If you are going to get a mentor, do that same work, that same due diligence of ensuring that this person is actually legitimate, has some kind of credentials or something you can actually rely on, rather than just pizzazz and flashiness and showboating across the board, right? That's the first and foremost. And like Anastasiia said, it is going to be somewhat common sense and up to the individual, which is always the hard thing to, teach someone how to do that. You kind of have it or you don't. But yeah, it's one of those troubles when, common sense isn't so common, right? So
Yeah. Oracle was just saying it in the comment as well.
yeah, there you go. There you go. Exactly. Yeah.
So, it's also the same as, for example, there was a period of time when I was more active on social media. My social media almost dead right now, but I was more active and I was getting the fake accounts almost every single day, or definitely a couple of times per week. Like someone created a fake account of me and then started texting subscribers, about that. But like if my posts are once a month or like twice a month and there is an account that created the same, like, and all the posts are in the same day, and this account is messaging you saying, hey, send me $500, I'm going to return you 1,000 in a week. Like if you are sending this money to this kind of scammers, it's no one fault but yours.
Yeah.
I mean, it's a common sense, but people actually get scammed because they are looking for easy money. The same as why does the online casinos and all of this kind of stuff works, because people want easy money.
Exactly. And I've seen a bunch of guys mention certain peoples like this in the chat. I'm not going to name any names here at all. But yeah, put it this way. If they're trying to mass sell this kind of stuff, it's probably nonsense. No one would be giving away, if you've actually got a proven approach to the market, you're not going to be just printing that on the internet. That's called, what is called in finance as alpha decay. You've got the entire financial sector trying to look for alpha. Alpha basically is describing a strategy that outperforms the overall market baseline, right? And everyone is trying to search for that. Institutions pay individuals, millions and millions, tens of millions a year to come in and do that, and doing a lot of quantitative, math-related, heavy technical kind of work. And for someone telling you that they're just going to give you this thing, and no, it's nonsense. If you've got that source, you wouldn't be doing it. So typically, if there is someone worth that and they want to do share, because some people also do want to go, hey, trading's kind of lonely, I feel like I need to give back a bit, it will typically be a much smaller core community. and not this mass aggregated selling marketing machine going on, right? So just a heads up for you guys, because we get asked this stuff pretty regularly. Shubham, what's my real name? My real name is Lockie. So Lachlan, Lochlan. That's my full name. Normally go by Lockie or Lock. LJ is basically just stuck. The J comes from my middle name, which is John. So Lockie John. There you guys go. But yeah, it's just stuck as LJ in the live streams and everything, and so we just ran with that. But yeah. Wait, what was this? Full name Justin Langer. Big cricket fan, I see. Big cricket fan. Nice one. Yeah, I mean, it's just one of those things that comes up regularly, and normally, you know, people want to dance around certain things, so hopefully that's at least helpful for you guys. So, yeah. My son loves... Dude, I used to be on the Wiggles back when I was younger. It was a great time. I did a bunch of TV stuff. Any of you guys in Australia as well, on What's in the Box. Did a bunch of Vegemite ads. Did some stuff for Cheese TV.
You were on TV?
Barney as well. Yeah.
You were on TV in Australia?
Yeah, I did a whole bunch of that stuff. Yeah, when I was younger, as a kid. I was on all the kids shows and stuff. Yeah. Good fun.
That's cute.
Yeah. But yeah, charts though, since we've been talking about other stuff for a bit. Because we have, say if we go over to, I'll bring up mine real quick. Might have to remove some of these drawings on here because they're a bit of a distortion. Yeah, Nev. Yeah, Lucky John. There we go. I can be lucky now. Lucky John. So we did tap into that higher area, that box. See if we get this further pullback now that both Anastasiia and I were looking for. I'm just going to delete this. You guys can see what we're talking about. Delete it so you can see the candles a bit better. So we're looking for now a move back from here. Pretty much we've got kind of a break and retest type situation of this channel. We've broken, tested the top side. We got this high liquidity boxes up here, as well as the tops from earlier today. Come back into this midpoint and then look to shoot back up. That's sort of what I'm waiting for now. The other trade I did have going on, which is the only one I've got in play right now, which I've now TP'd on, was the Aussie dollar trade. We started to stall out through here. So as we pulled back and didn't get that extra shunt, I ended up jumping out just on this second candle. So after we dipped back, pushed back up, but then failed, started to wick back down, I've now jumped out of that. But still fair trade. So what else have we got? Pound, similar deal. That was a movement from before, so this is now old, so we'll get rid of that. Oops, I just deleted the moving averages. I didn't want to do that. There we go. Delete the drawings. Delete the Picassos. Same as the euro dollar. So I'm looking basically for this sort of middle section through here. I'm sure if you put a fib on this, this is going to be like a 38%, roughly there from the top to the bottom. So I'm looking for a bit of a pullback there and then come up. The thing to remember, the pound, generally speaking, has either fared a bit better than the euro dollar recently, so it may not drop as heavily. Might just find a sort of wick prematurely to that and then run up. Whereas the euro dollar is probably better suited to actually pull back. Dollar yen, we can see the similar aspect. We're looking for this to sort of find some kind of base through here, pull back up. We've got that structure coming through there and then come off right? So there's the quick 2.5 minute rehash of the majors for you guys. Gold. So gold has failed at the top of that channel. Once again, I'm going to extend the channel for you guys so you can see it easier. They're running through here. We've had, just like the prior channels when we were talking about this earlier, we've had gold having a general channel with various like touts outside of the channel, only to pull right back in. We've had the same deal here. Had that last night. Over here, we had it previously in the week as well. We've now had a tap to the top. We've come back to that 10 moving average. So it's going to be a question of whether we push back further into the center point down to this mid cluster of near-term trade action here and then bounce, or this is sort of what we see for today. That was the extent. We trade sideways and consolidate through this channel and then look next week to actually drive higher. Thoughts, Anastasiia?
I have the same outlook for gold right now. I'm literally looking at it. So, wait, yeah. Right here, we have the daily point of control as well. So as long as we hold above this zone here, I'm looking for still a buy. So about this zone here. So I'm pretty much seeing the continuation to the upside from here on. We didn't reach this level yet from where I was expecting the reversal. So I'm still assuming slight continuation to the upside. We have a high volume cluster at 3460 by the futures, so we still have a little bit to go. We didn't approach any volume zones, so I'm assuming the continuation to the upside is still in the plans from here on.
Mm-hmm.
So yeah, that's the same things that I'm looking for the 6J actually, which is a yen futures. I'm also looking for the continuation to the upside for Euro USD, GBP USD. So I'm assuming that if we're gonna see the drop on dollar in the second half of the day on the news release, we're gonna also see the move to the upside on gold and the rest of currency pairs as well.
Mm-hmm. Definitely, I agree. That's sort of the market at the minute, to be honest. We've had this sort of the past, this week, last week, the week prior. We're still in that, European holiday period, guys, as well. So that's why, dipping in about talking about other stuff, then going back to the charts. It's a very, overall volatility / volume. Volume is lower, so hence volatility is a bit more gradual. It's a bit more of a, a general bubble up or general bleed out rather than impulsive moves that we've become used to, especially since Trump coming back into the presidency as well. So, yeah. Let me run through chat again. Did you have an aha moment? I guess that would have been when you took on the mentorship, which we already talked about, right?
To be honest with you, I had so many aha moments. Like there is no one aha moment. It's like it depends what you're looking for, right? Like we're facing different challenges, different pitfalls in our trading, and every time to get out of there you need this aha moment. Of course, one of those was when I took a mentorship, but mainly when I learned about the Forex futures market, when I've learned the difference in the centralized market, the decentralized markets, the data that I can access as well, so the footprint and volume charts. When I understood the market auction theory, that obviously clicked, and it was the aha moment, definitely. But there are many others, like risk management, for example, and realizing that the goals I set for myself, for example, during the day or during the week, without setting the goals and without running towards specific target, I'm making more profits because I'm not over trading, I'm not overreacting, I'm not revenge trading. Cutting down the amount of hours that I spend on the charts and the amount of trades ironically brings more profits than spending more hours on the charts, taking more frequently trades as well. So cutting down on the amount of trades and time actually gives more profit, Whether it's the opposite, then if you go to the job, for example, then when you are paid by the hour, of course, we all learn how to get paid by the amount of hours we spend on certain tasks. So that needed to shift as well, of course, because you need the mentality as well of spending more time. You feel like you need to earn with the time that you are putting in specifically on trading the amount of money that you're going to be getting. So that was an aha moment. But there were countless of them, to be honest with you. If I would create a list, there are definitely a couple of A4 lists of all aha moments that I've been throughout the past years.
Yeah. I guess it's like, it's reminiscent of life, right? As well, you're at a certain age when you get to, I don't know, 15 and then 17, 18, 19, 20, 22, you think you got it figured out and you realize you'll learn something else, 25, life is a journey of learning and experiencing things and then iterating upon that. So trading is going to be the exact same way. So there's no one single aha moment. You might have a critical piece that shifted the I guess the difference when you went from losing to at least now you're profitable. But then beyond that, you're going to have various levels on top of that as well, and that's going to be everyone's personal journey. Hey, so Dinesh, we can see your comments. If we miss something, rehash it right now in the chat, and we'll get back to you. Don't worry. Marina was saying hi before. Hello, Marina. How we doing? Henry's looking at gold again. Gold on the 30 minutes. Looking at the wedge. What wedge are we talking about? Like something like that? Let me get my. Let's first of all delete this because it's distracting. You tell me, Henry, if this is what you mean. Like that kind of wedge? Is that what we're talking about? As far as an ascending wedge? Because if so, then yeah, I can see that pulls back into the 10. You might get that slight overshoot because gold is gold. You get a wick. This is going to come back into this center point. You've got that candle there, liquidity through here. You then bounce, drive higher. Definitely possible. Stephen. Currently selling gold to 33.81. 81. So bottom of the channel. I mean, fair. Brave man. I don't know if we'll get that far, to be honest, today. Just like you're saying, Anastasiia, there's you're highlighting there's liquidity sort of through that section and then through this section up here where we're currently sort of playing around at, right?
Yeah.
So I don't know if we'll get back to 33.80 today. If we did, I'd be pretty concerned. I'd say we'd possibly just completely fall out of this channel and go back to the 200 and retest yesterday's lows, to be honest, if we got that far. I would say that would invalidate the entire up move. So Shubham, you want to have an interview with the 5ers after scalping your funded account? Where to apply? Reach out to Jonatan. I can't remember his email off the top of my head. I can actually probably look it up if you want. That or else next time Jonathan's on the stream, because I'm not sure what it is. Next time he's on the stream, just try and message him or tag him in chat, etc. Try just yell out to him, and he'll definitely do that for you for sure. Definitely looking for people for that all the time. Henry saying no from the big bullish candle from Powell. So okay, so you mean like a much greater wedge? like that. Is that what we're talking about? Like this entire larger overall structure? Just going to manage some of my other positions. Getting alerts right now. We're just tapping the tops of some things. That's right. Yeah, I mean, I can definitely see that. That'd be a similar concept as to, I guess, what I was saying before, and Anastasiia was highlighting as well. You can see the top of this wedge is coming out just above 3,400. We get some kind of price move into there, and typically when you get a wedge formed like this, you end up seeing a drop, right? So you come back into this general area, and then coming into next week, we see potential run higher or else a decline there. But yeah, so definitely agree. Definitely can see that. I think we've got a bit more buying pressure, at least for today, intraday. I have to see coming into tomorrow's PCE where we end up with that overall.
We were literally answering this question before a couple of minutes ago. So if you go back, we answered your question earlier.
Yeah, we did. Yeah.
Yeah, we definitely did. Now, Dinesh was asking this question that he said that we didn't see before. Now, I don't really know what the question about. Of course, you calculate your lot size and the position size before you take a trade. Like, how can you take a trade without calculating your position size? Like, before you are ever in a trade, you need to know how much you're risking, right? Otherwise, you're gonna end up being like, oops, 1/3 of my account is gone. How did that happen? Like, of course, you need to calculate that, especially concerning if you're trading, for example, CFDs. Now, on different brokers, you're going to have different calculation of the lot size for assets, like, for example, indices, sometimes even gold, oil, and certain things like this. So, of course, you need to calculate that.
Yeah, definitely. You should be having that stuff sort of figured out before you actually jump into the trade, right? So, as far as calculating your lots according to your stop loss, normally you'd calculate where your stop loss is as far as the structure of the chart first, and then you kind of reverse work that to how many lots you should take. So you go, okay, this is where I want to place my stop. This is where my entry is. This is where I'm targeting. Now, for my stop to be that far, how much in dollar terms or percentage terms am I willing to wager on this specific trade, right? And then that will determine how many lots it is. So the lots is more determined based on the distance between where your stop would be, such that the stop is the point that invalidates your trade idea, right? So sometimes if that stop loss distance is, I don't know, 15 points, it might be we'll just throw out hypothetical numbers. Say you got 2 lots. If it's 30, you might have to go to 1 lot, right? So it's the stop loss distance and the total potential loss in percentage or dollar terms that dictates the actual lot size, not the other way around, right? That's how you want to do it. Have you seen anything else, Anastasiia, at all?
Not really, no. I'm probably going to be waiting for the new process here.
Yeah.
I'm still in a buy for 6J, so the reverse would be in a sell for USDJPY. But for the rest, not really anything interesting, to be quite honest with you right now. The Euro USD, if we get back to here, it's coming to the point where I'm going to get the confirmation of the buy entry. So when the price to hold above this zone here for our candle to be closed preferably, and then on some kind of pullback and confirmation, I'm going to be buying it. So that would be my view on the Euro USD today. I see I also love my Picasso drawings here. For the GBP USD.
It's beautiful. Hey, you can't take Picasso though. You gotta pick another artist. I've taken Picasso. All right. You You got to pick. I don't know. Who's another artist that you like or something?
Let's not go that path.
You're like, I can't think of any right now. Don't test me, please.
My head is still, after the sickness, I need some really.
Picasso wouldn't even be my favorite artist anyway. So, but we've stuck with that. So don't worry.
And for the
Yeah.
pound, actually,
Continue.
I'm looking for the longs as well for actually a little bit higher probably. I want also the 4-hour candle, 2-hour candle to be closed before, and then if you're gonna get closed above this volume node, I'm also gonna be looking for the continuation to the upside. It does look quite interesting for me personally, so I'm gonna be looking for those two for the New York session, Euro USD and GU continuation when the US dollar shows weakness in the second half of the day. Yeah.
Fair, definitely fair. Give me 1 sec. I'm just replying to something. Okay, cool. Yeah, we have Anastasiia for another 8 minutes, guys. So even though she's sick, take advantage while she's here for another short amount of time. But yeah, Sam was saying Da Vinci, but maybe I should be more Da Vinci and you can be Picasso then, because I am wearing the necklace, right? Remember with the
Yeah.
yeah. There you go. You got Da Vinci right there. So maybe I should be Da Vinci now, and you can be Picasso.
Cherry is asking, are you taking less trades because you're a high time frame and use high time frame to analyze and jump into the trades, or kind of swing turn? To be quite honest with you, a lot of the times people think that they're scalping, they should be taking automatically more trades. So people associate the scalping and the short-term trading with higher frequency of trades. I personally don't think so. I think that even if you're a scalper and intraday trader, 1 trade per day can be more than enough. If you time it right, you take it, you get out of it, you get your profit. That's at the end. I don't think that style of trading that you choose for yourself needs to be directly correlated towards the amount of trades that you take. You know what I mean? So no, it's not because of this. It's because I prefer to find a good opportunity for myself and then take a trade. Sometimes there will be days when I'm going to take 2-3 trades per day because there will be a very good market for myself, but usually I come down to, let's say, 1 trade per day on average, something like this. And I don't also trade every single day per week. I usually don't trade on Fridays. Fridays are really not like frequent trading day for me personally. It's Monday, Tuesday, Wednesday, Thursday, majority of the times. So it's not because of a swing trading style or it's because I use high time frames. Not really, because I use a combination within a week. I use a combination of 30 minutes and 5-minute time frame. So someone else could be taking many trades using those 2 time frames because it's not such a high one as you might think about. But it's because I'm really looking for something that I'm going to be 100% sure about.
Yeah. So it's quality over quantity. Right?
Yeah,
that's what you want. Yeah.
It's just also one of my aha moments was like that I was getting stuck in this emotional roller coaster. Like I was taking trades, I was losing. Then in the second half of the day, I was making it back. And I figured like, why am I actually doing it? Instead of taking this fast, like quick trades in the beginning without properly analyzing it, jumping in it straight away from the market opening, why don't I just wait instead of covering the loss, already making the profits within like second, third, fourth position, So there is no reason to rush it. You just wait, market presents an opportunity, you go for it instead of chasing it. Those are 2 different approaches. But a lot of the times, especially newbie traders, have a need to be constantly in the market, to have an adrenaline of experiencing, to be being in the position, seeing the P&L go up and down. It's because people are getting attracted to these emotions and to this, high, like dopamine, for example, of being in the trade, that we want to have more and more of those during the day. but it's not directly correlated to the amount of profits that you're going to be able to get.
Exactly. Yeah. So quality over quantity, and yeah, like you don't need to jump into a trade every single second. There's another bus coming every single day. There's plenty of them. You'll find one. Don't think this is the exact one now. It's better off waiting with that, and
Yeah.
then come later, and you might get 2 or 3 in a row, which are brilliant. But if you've jumped around, jumping into scrappy trades beforehand, now you're just making up the difference, trying to play catch up on those losses from the prior day. So yeah, similar deal. Some days there'll be 1, 2, 3 trades, sometimes 1 or none. Other days I'll take 10, 12, 15 trades as well. When it's really good, markets are very active, and I'm like in the kind of zone with it, great. But if not, then you got to know when to stand back.
Let's also tap in a really important point of, are we setting the daily targets, for example? I think setting a daily target or the weekly target doesn't make any sense because some of the days are going to be really bad and you don't want to be in a trade. You don't want to be chase a trade. If you have a daily target, you're going to be automatically pushing yourself to take the trade when there is no good opportunity and the market is just flat, for example, or there are many news, or there is bank holiday, or there are other things that are causing the market conditions to be not ideal. And some days are going to be really good. So if you have a set daily target, you're going to be cutting your profits that you may take on a very good day instead of maximizing the good market opportunities that are presenting themselves. So why would you have the daily target or the weekly target? Like, you need to see what the market is giving you, and then, in my personal opinion, and then act upon it instead of trying to chase it and they try to squeeze out of the market something that isn't there sometimes.
Agreed. Definitely agreed. And the same thing with not just days, like it can be weeks sometimes. Like this, when you have prime example right now, a lot of people have been saying it's been very tough. We've got that European summer we've talked about a number of times. Sometimes you just like everyone else does, pack up, go home for this period, or just take very small, very few, very select trades and make the majority in Q1, Q2, maybe some more in Q4, and Q3 you go, look, that's just how it is.
Yeah.
I'm just to accept what comes and don't try to force it. Because as soon as you're forcing things, that's not what the market is. You're going to turn up to what the market is offering you. You can't, project something that you want onto the market and try to get it out. So, any final wrap-up questions? I think we've seen, if I jump over to my chart, we've seen the Dixie now further run off. So this was the initial scope out from ABL earlier that I talked to you guys about when we started the stream. Whether we'd tap into there, run right off, or we'd come down here, get a pause, get the pullback, then run down. As you can see, we've just churned right through. We've smashed through it. We might be coming up to a relative pause point through here. I think Kavika was mentioning a couple levels through here as well, which I can see as a relative pause area. Just down here, we've got this sort of cluster, adjacent cluster to the left, which we might get a final pause position. But then you're probably, again, same as what we're looking for up here, that break, pullback, retest, and then continue running down to some of the lower levels on the Dixie, just there. So if we go back over to euro dollar, it's now pushing up to the equal heads with the prior levels from last night, or I should say yesterday, Asia, before we collapsed. We're back into this general sort of neutral zone through here. I would say we might pause. Dollar yen is definitely looking much weaker overall. Pound, same deal, testing the equal tops now. Gold, just as we talked about before. Yeah, UJ is looking pretty weak. Anastasiia is looking for the shorts on UJ. So there you go.
Well, I'm technically
Any
short on
final
UJ.
input before you say goodbye for the week, Anastasiia?
I'm actually in a short for UJ right now, so I'm being in a short since like a couple of hours already. So I'm looking for the continuation to the downside for the USD JPY as we've talked earlier. And I perhaps going to be looking for the buys on EUR USD and GBP USD quite soon because they're getting into the areas of my confirmation also. But for the UJ, I'm going to quickly once again repeat it. So I was in a sell from here, from test of this day of the weekly point of control, and I'm aiming towards at least previous lows here or towards the previous lows right here to be taken today. So there is still quite a way to go, I personally think, throughout the US session. But maybe I'm going to be able to join your IBL stream.
Maybe.
If you guys want, of course, me to stay on.
It's totally up to you, honestly. Totally up to you. If you're busy, you got stuff going on, then no sweat, right?
I mean, that's the last IBL stream.
Don't put her off, LJ.
I already tried to bring her in before. All right, I said I tried to pressure her, and she's like, "Nah, I got some stuff." Busy. Okay,
that's why I said it's the last ever ABL podcast in its current form, and you're trying to tell Anastasiia not to join us.
I wasn't. I was just being.
How we sign off. We can only sign off with Anastasiia.
Chat, back me up. Mike's trying to bully me right now. Tell me, I did try to push Anastasiia to hang around. All right, back off, Mike. Chat will back me up, and I'll get my own army to fight you back. So,
all right, fair enough. Right, well then let's roll the intro for one last time, shall we? And let's do it.
Let's go.
One last time. One more time. It is time for the last ABL weekly podcast in the series. And we are joined by familiar faces and new faces. We've got Anastasiia, we've got Rich, we've got Will. How are you all?
Yo.
Don't all answer at once. Jesus.
I was wondering who's going to actually comment then. I was like, I'm just jumping in.
Honestly.
That's good, man. How are you doing, guys? How are you doing?
Very good, very good. I was in a gold. Well, I am. Am I in a gold? I seem to have a trailing loss that I didn't know about. So I've just got taken out of this gold buy by a trailing loss on my C trader. This is why I shouldn't get myself familiar with C trader on a live account. Just end up having hit trailing losses without realizing it. But hey ho, never mind. Will, for your first time and obviously our last time, I don't know if you've seen the weekly ABL podcast before, but basically we just chat. Basically, is pretty much what we do. So it's not so much live trading as such. We do have the charts up, but this is kind of the segment in the week where we just get together, have a little bit of a chinwag and a chat, talk about anything that comes to our minds, basically. Whatever the chat might want us to look at or talk about. We maybe talk about what's been happening in the week, anything that's maybe triggered us, anything that's maybe impacted us in one way or another. Rich normally comes up with some goods. It's his kind of hour to impart wise words of wisdom onto us all. So Rich, I'm going to ask you first. Have you got any burning topics on the tip of your tongue?
Mate, I'm a little bit thrown off that this is our last session, and also the amount of people saying hi to us in chat. We hold a Discord call a little bit later on today, and I try and remember everybody that says hi on the YouTube stream so that I can reference them in the Discord call later. There's too many of them. I'm just going to acknowledge everyone, say hi, how you doing? Super sad day that this is our last session, and for those of you who know a little bit more, stoked to be back on a live stream with William Davis himself. So,
We're bringing back the legends of the live London trading room, reunited once again.
I used to watch you guys stream back in the day as well.
Mate, I literally saw Rich in the lobby. I messaged him on WhatsApp. I was like, "Hey, yo!" I was like, "Rich, is that you?" Yeah, man.
We'll keep it PG. We won't share what Will messaged me, but it's all friendly. Wait, what have you got for us? Last session, are we going out with a bang? Have we got something super big lined up, or are we just?
Absolutely. Yeah, totally. Yeah, I've got massive plans of absolutely nothing. So, I mean, tomorrow is our final ABL stream over on the ABL channel, but today is our final 5ers Live Trading Room takeover with the weekly podcast. So yeah, I mean, it's I suppose it's a fair opportunity to do a bit of reflection on the whole concept of the podcast and kind of maybe get some feedback from everybody and see what everybody thinks. But the whole point of this was to not just do live trading. Right, and we know that the viewers then go down because everyone's like, "Oh, this is boring. There's no action and everything else." So that's when we started sticking a chart on and sticking a random trade on, so that anyone that joins goes, "Oh, there's a trade," and they don't actually pay attention to what we're saying. I mean, I'm curious what everyone in the chat thinks. Because we've tried not to make the podcast too heavy, too serious. We've tried to add in a little bit of humor where we can, but at the same time we've tried to impart kind of advice, knowledge, thoughts, etc., and perspectives. I mean, what do you think the key thing that you're going to miss from the podcast, Rich?
When I think back to the origin of the podcast, it was just a group of mates hopping in a call and having a proper chat about trading, just a raw chat and sharing kind of like just everything that you experience as a trader. And then we all recognized there was so much value in it for ourselves, just having a chat through and being like, guys, look, not going to lie, I lost my ass this week. And just actually being real and saying, look, I took this trade idea, I shouldn't have taken it. Maybe it's something I'm struggling with, but being real and being authentic. And then over time, we were able to say, you know what? These add enough value to ourselves. Maybe we should do this in front of a bigger audience. And Mike has this opportunity where we're able to do this now for AlphaBeta Labs and in front of the live streams. And it was, it's been a blessing just to talk about some of the topics. I think sometimes we go into the theory of what technical trading should be. And if I'm being totally honest, the calls that I enjoy the most is where we just say, do you know what? Hold my hands up. This is me. Because we all hold these kind of ideas and these titles of how we should be, right? I know. Obviously, we have to have a bit of a filter. I hear LJ laughing there, but we all have these titles, and it's like, well, you should act this way because you are this. But underneath that, we've all gotten to know each other really, really well, and everyone's just normal people going through normal stuff and trying to balance that with trading on top of it is often, I guess, the unspoken side of trading. We have this idea, well, I'm going to be a full-time trader, which means I get to shut the world out for 10 hours a day and just trade at the charts. And it's like the postman's not going to knock on the door and my phone's not going to ring and the cat's not going to run across the keyboard, LJ. Shout out to you. My cat's doing it as well. But we think that life's not going to get in the way. And often when you pivot into full-time trading, what happens is family and friends go, he doesn't do anything now. He's now got all this time available. Maybe I'll just hit him up. We'll go down the pub or we'll go down the gym or whatever the case might be. But it's, they're the kind of stuff that we talk about, I guess, as a little bit more behind the scenes, like the dynamics of life. And because obviously, if if you've got a pretty crappy life, if your ducks aren't in a row, then trading typically follows suit with that. I'm yet to meet an organised trader that their life is in absolute carnage. It's normally whatever you're experiencing in your life, trading will kind of be a mirror to that. LJ's cheering. What's going on?
We're just getting a lot of love from the chat, which is nice to see.
The fans. That's
it's lovely to see. Lovely to see. So, I mean, Anastasiia, you've joined us a few times. It took us a while to get you to join us on this segment, but when we finally did, well, then
you're going to remember this forever, right? ABL won't be running anymore, but you're still going to be reminding me how hard it was to get me on the ABL.
Absolutely, totally. Never going to let that go. Never letting that go.
Exactly.
But I'm curious because this is, as an industry, right, is very male dominated, right? It's hugely male dominated. And, there are a handful, I would say, of female public figures, right, in terms of the trading industry and so on. But for me, for example, the beginning of this year, I started, kind of regularly chatting with the likes of Rich and LJ and Alex and Jonatan and Victor and so on, and Abe. And that gave me a real sense of belonging that I didn't know I was missing. I didn't know that it was something that I needed, right? And it was only when I had it, I was suddenly, oh my God, I finally feel like I belong somewhere. I finally feel like there are people that are totally different to me, but totally this, kind of similar, same aims, same goals, etc., etc. And obviously, it's not as easy when it's maybe face to face. You've got a group of mates that you can go out with for a coffee or a beer or whatever, and go watch the football or go out for a meal, whatever it might be. But how is it for you from a female perspective in this industry? Do you feel that that's something that's lacking from your side as well? That you've got this kind of this opportunity just to chat and be honest and be real, rather than everyone go on and on and on about their Lambo and their palatial, white gold toilets and all that stuff.
What's wrong with my Lambo?
Hey, right? Leave our toilets alone, man.
Yeah, exactly. Me and Will, our Lambos and toilets, right? Hey, come on, personal attack, right?
Personal attack. To be honest with you, as a female in the industry, it's a little. I think personally, it's a little bit more tough to be taken seriously. Because automatically when they see the female trader, lots of people feel like it's a scammer, it's just for the marketing, it's just for the sales, and lots of different other beliefs that are out there. So automatically you need to be more serious, you need to hold the picture basically. So it took me years to be able to allow myself to be myself, with stupid jokes and sarcasm and the self-irony that I have towards myself, as well in my own trading. So it took me years, but to be honest with you, within, knowing you and LJ and Reach and Will, it's the first time I believe we're together on the live stream. I hope not the last one. But it does really make a difference. It really does make a difference, because it's also totally something else when, for example, I'm communicating with my students, because it's somewhere from like a teacher to the student standpoint. And that's completely different than if you have a group of people whom you can feel like equal with, and you can learn something from each other, and you can be open and honest, and you can be just yourself within basically and both your life and the personal matters and the trading. And I feel that makes really such a difference. Of course, it's also would be taking it to the next level, meeting all together, in person as well, and being able to chat and just have a look at the chart perhaps together in the person, but also already having it like this in a podcast or just within the personal, for example, texting, is a huge boost towards just overall, feeling of, like you said, belonging to something, somewhere, feeling like you're not alone in the industry and in your own, way of, because we always like going to the next level, to the next stage. We're always learning and growing. There is no ever a point in trading I feel like it all, as well as it just becomes boring at some point if you're alone. To do the same thing every single day.
Yeah.
So I feel like also it's like the feeling of the community that is being created by the ABL towards viewers and towards our audience is something that a lot of people are looking for.
Yeah.
So
Yeah.
yeah, I think everyone is looking forward to the next adventure that you guys are creating here.
Yeah, I mean, for those of you who don't know, ABL as a name is being paused. It's not being closed as such. It's just being paused because it's part of a much bigger planned project that we're working on, and we're now at the point where we're ready to kind of really shift focus entirely on building out that platform, and really kind of expanding that key educational piece, which I think is really, really important. There's a lot of noise around education, right? There's tons of education out now. LJ was, and I were talking about it this morning, that education seems to be like the buzzword pretty much since 2020, right? And it's just gone parabolic ever since. But a lot of it is just education for the sake of education, and there's no authenticity, there's no reality to it, right?
Yeah.
I mean, I think that's where Rich, Will, where you guys, you had that core following of people on the London Live Trading Room, because people appreciate the authenticity, they appreciate the banter, they appreciate the real people who are sat in their living room or sat in their bedroom or sat in their shared co-working office or wherever it might be, and just being themselves, and who are part, they're on a journey. They're not making millions and trying to portray themselves as millions. They're not sat on their phone, sat in their Lamborghini driving down, the highway in Dubai or God knows what, and trying to make it out as if, I've just took a $1 million trade on gold, sell or whatever. That this is, it's just giving that false expectation and that false reality of, everyone can do it, but 95% fail. So something's not equating, right?
Yeah, Anastasiia and I had a bit of a chat about that as well earlier. So go on though. Sorry, Will.
No, yeah, go on. Will, were you going to say something? Sorry.
I was going to say, no, I was just clearing my throat, mate.
Okay.
I wasn't going to say anything.
I was just going to, we sort of hashed this out as like a general thing of like what to look out for, that kind of stuff, between the kind of people that are, just trying to do some like larger marketing type, enterprise versus, real people actually trading, actually being in the markets. That's where they make their majority profits, and everything from active, actual, real traders, not just glorified social media marketers, right? I won't go through it all because a bunch of you guys were here. We've already done that, but definitely echo what you were saying, Mike.
Yeah, and how do you find that in today's world, right? I mean, obviously, we're not, as I said, we're pausing ABL. It's not stopping. I've got a personal podcast project in the pipeline that I'm working on, that will hopefully will start soon enough. But it's not going to be live stream. It's just going to be recorded and shared and whatnot. But how do people find that without just getting lost in the noise and lost in the masses? Because, like, for example, you can go to a Discord community, and I think in fairness to the 5ers Discord community, and Abe does an amazing job on this, as does the moderators. All of, many of us have, well, myself and Rich were both moderators in that community, Victorals as well, where we started off. That's a community where it is very kind of protective to make sure it doesn't become toxic, make sure it doesn't become overly macho or bravado or flexing or whatever you want to call it, right? But how can people, because I'll be honest, me, stumbling into Rich and LJ and Alex and Jonatan and Victor and Abe and that whole group that we have, I feel that was almost a little bit accidental. It wasn't something that I was looking to find and trying to kind of find this spot for me. It just happened. But I personally do believe that it is hugely beneficial, and it has been hugely beneficial for me. Some of Alex's trade ideas maybe less so, but we'll put that to one side. But
that's right. He's the dead weight that we all carry. He's like donkey in Shrek. Like, he just follows around. Right.
It's like Donkey from Shrek.
It's great. He's not here to defend himself, so we can just keep going.
In the comments as well now.
Let me do this slightly on this. Like you were talking a minute ago about like the failure rate in trading being so high, right? What if, and this is hypothetical, we'll never know the answer, but what if, right, every single piece of trading content that was allowed to be put out on any kind of social media, right, had to be 100% legit and realistic. So we got rid of all the flashy stuff that was just big, like not real. What do you reckon the failure rate would do then? Do you reckon
Donkey's going to jail then?
Sorry? I missed that.
That's right. Some people would have got it, some people didn't. If you heard it, you got it. If not,
okay,
never mind.
If we were putting out,
to be honest, really. Yes, sorry. Go on, Rich. Go on.
If we were putting out, like, if everything across the board was just genuine, raw, real content and showed everything, not just the past accounts, but the failed accounts, that would adjust the expectation of traders. Therefore, would the failure rate come down?
I don't think so.
I don't think so. You might have like a slight plus minus statistical deviation, but I think net it would still be.
I think the failure rate would be the same, but I think the amount of people getting into trading would seriously decrease.
Because
so that would
it's hard. It's hard because basically the point I would put in. I mean, I guess there has to be some recognition that with some of that stuff, people fail hard and fast very quickly, and at least there is potentially some benefit that when you start out, you probably have a little bit less. So failing hard and fast with less is arguably more beneficial. Then you go to the other avenues of trying to figure it out properly, and then you go off from there, right? Whereas if you had the more slow burn stuff, it would just be like extending the timeline.
You don't?
I think this gets into a larger thing because I'm not sure. I think it would be very close though. I don't know. It's tough to say
because the expectations is a big problem in trading. And so what I'm leaning into is, does this kind of fancy, where the traders are making ridiculous money, does that give the traders an unrealistic expectation, and then that's what they're aiming for? And so, I mean, we were only chatting about it, I think it was yesterday, too much throttle just creates wheel spin. But if you set out just to kind of bob along, trading is much simpler when you're trading with a tenth of the size.
So I think Oracle's made a good point here, right? Expectation is influenced by social media, right?
Yeah.
Expectation. So the expectation is you can drive a Lambo, you can make millions, you can sit there on your phone and trade, and so the expectation is distorted. Doesn't necessarily, if we remove that expectation, that doesn't necessarily make trading easier, because those of us who have stuck with it and keep battling through and everything else still face the FOMO, still face the over trading, the revenge trading, all those sorts of things. So I don't think if you remove the social media expectation, I don't think that necessarily suddenly reduces the failure rate. I think all it does is it possibly reduces the number of people that are drawn to it.
Yeah, 100%. That's what I mean. Like, I agree, but I disagree. Like, trading's always going to be difficult. Like, I'm 7 years in now, and even last week I revenge traded. I put my hand up. I was like, oh no, literally, I lost like 3% by the end of the day, or 4% by the end of the day. I looked at myself and I was like, Will, you idiot, you could have only just lost 1%, or you just tried to get it back, and you ended up over leveraging, you over traded, you revenge traded, you went down a psychological spiral. But luckily, I was due to the experience, I actually managed to gain that back through experience and think, right, I've acknowledged that, let's change it. Trading will always be that difficult. So it doesn't matter how many people come in, you will always go through pitfalls. And I've gone away and spoken events all over the UK about expectations in trading and speaking about the reality of trading. But what social media does, but what social media does is, like the Oracle said, is it gives you that unrealistic. It's the speed that it
exaggerates it. Exaggerates. Because we've had businesses for ages. Business has roughly the same, sort of rates as trading. Right?
Yeah, literally
but that. The entire economy, the entire globe is based on businesses. And it doesn't mean don't start a business, but there are certain aspects where, despite all the information, everything we have now, the rates still stay the same, right? No matter how much that changes. I don't know. I've got a flow.
I think less people would get traded.
So
Sorry, Anastasiia, go on.
1 second, Anastasiia. Yeah, I was going to say, Rich, it depends on that wheel spin. I drive a rear-wheel drive E46. Sometimes you want that spin. I mean, that's what you're looking for, right?
Back end out there.
Yeah, you want to throw that back down now. Exactly. Exactly.
Let's not get into too much GTA. Car
it's not
language.
GTA, Mike. It's just driving a car on the street.
Sometimes you do want to go around the roundabout sideways.
Yeah, exactly. But yeah, I was going to say, I think Anastasia's got a good point. We were sort of talking about some of this stuff, and I like what Anastasiia brings is some of the just like sort of more hard, brutal realism stuff that we were talking about a bit of common sense and that kind of thing. So, Anastasiia, over to you. I think that has a good here.
Yeah, we talked about this earlier with LJ on the stream. I think the amount of people getting into trading would be perhaps different, but it's a problem of people, right? Because the reason there's all trash content about getting rich quick in trading exists is because people buy it, because people want it, right? Because people want quick amount of money, and if it wouldn't be for trading, it would be a different kind of industry. It would be, for example, a drop shipping or whatever else. Also where the image of getting rich quick exists. So the reason this whole image and promotion for trading is in place is because people are actually looking for it, and the wrong people are getting in trading industry. Not the people who are really ready to put in the work, but those who are expecting to become millionaires by the end of the next year. So the reason that all of these bloggers and the flashy Lambo, traders driving around making millions by just their phone and not even having a big screen in front of them to analyze charts probably is because people want this kind of stuff. They want the trading strategies that are going to lead them by step 1, step 2, step 3, and that's it, without getting in depth, without learning. If people would be coming in the trading industry, really understanding that to be able to make money or to get any kind of success in any industry, you need to put in the work. They wouldn't be buying all of these courses. They wouldn't be buying the signals groups. They wouldn't be buying these mentorships, because it's easier to buy it, to fail in it without putting in the work and say trading doesn't work. The industry is a scam, and you are all not real traders, because it's easier to blame someone for the lack of success than actually blaming yourself because you realize that you didn't have enough work ethic, for example, or persistence.
I 100% agree with Anastasiia.
Exactly, yeah.
Massive point of accountability.
So are we saying then that failure rate would actually drop if expectations were more realistic, because people wouldn't be tempted to get into it as much? Are we getting a lot of people that maybe just aren't suited to trading coming in that wouldn't necessarily be drawn to it without the big flashy kind of, the bling?
I don't think so, because I think even if you reduce the total net number, the same as far as the work ethic portion tends to be a pretty consistent rate. So if you drop the number of traders in half, you probably get the same success rate based on the percentage of that select few that are willing to put in the time, the effort, the grind, the input to actually get through to the next levels and go on. Which is why I brought up the business thing. Like, business is accessible to every single person on the planet, whatever economy, country, whatever you're in, no matter what, right? But the stats are the same in every single country across the board, which clearly comes down to some kind of a human input at a certain point. And some people realize that. Other people go, I'm doing stuff, I'm working hard. They want to tell themselves they're doing all the things they need to do. But if they were really that critical and that harsh on themselves, they'd probably go, I'm not actually really cutting mustard, right? And that's where it gets really difficult, because it's where they want to have that self-introspection to say, no, actually, I'm not doing the top tier level if I was really, really brutally honest with myself. Because that comes down to that psychological portion where people want to, put that aside because it doesn't feel good. It doesn't feel good, right?
What? Sorry, Anastasiia, you were going to say something.
I was about to put in the comment of this Puli actually in the chat. So he's saying that most people just don't have the capital or the time it needs to be successful. I mean, the time is a very subjective thing. If you really want something, you're going to find the time. When people say, I don't have time for something. Sorry?
And capital as well. That's also...
Yeah, capital as well.
They go the same way, right? It's a bit more difficult, but yeah.
Capital is a bit more difficult, but I'm 100% with Anastasiia on this one. Time is something that is so subjective. It depends on how much you want something. Like, if you're on about time as in, I'm too old for this, and you look at most millionaires out there, they're in their 50s, 60s, 70s. Not many people actually reach millionaire status pre 50 years old. There are cases, of course, and there's several cases. There's loads of them, but nonetheless, the most popular millionaires, or the most demographic for millionaires, I'm pretty sure, is over 50 years of age. If you're looking for the time and you're like, oh, I don't have the time, I work 9 to 5. Well, okay, you've got 5 p.m. till 10 p.m. Okay, let's say you've got an hour, 2 hours for evening meal. Okay, cut that in half. Go to half an hour to an hour evening meal. You can definitely reduce times. Wake up a little bit earlier, go to bed a little bit later. Maybe you're going to have to sacrifice a little bit of sleep for it. Capital is a little bit more difficult, especially depending on like high cost of living, low wages. There's several
taxes, all that kind of stuff.
Or there's several areas where this can be a contributing factor or a negative factor. But again, saving, different sort of pots you can save into, different sort of, prop is a massive opportunity for that. Without prop firms, it would be so much more difficult for a lot of people to become financially free when it comes to trading. However, there are so many different opportunities and different ways that you can become successful in trading.
Yeah. Anastasiia, sorry, you just finish your thought, Anastasiia.
Yeah, definitely.
No worries. No, actually,
I've got to keep this rowdy crew in. I've got to keep them in check.
Oh, it's good. It just means it's a good conversation, right? Yeah. I mean, dipping in and out. I would say on that, backing off what Anastasiia said, is that time. Yeah, definitely. It's something you do have probably the most control over. Like capital, like Will was saying, capital, taxes, whatever your other obligations are, cost of living, wherever you live. You don't have specific control of that. Your time, you do. 24 hours, everyone does. You can choose how to allocate that time.
Yeah. Now, everyone has the same 24 hours in a day.
You might have to say, I need to do this in order to do that. Yes. But you can always, bridge that somehow, some other way. I mean, case in point, you guys have seen me turning up all the time. I'm underslept. I'm sleeping like no time because I'm trying to do stuff, right? And so it's one of those sacrifice pieces. Do you want to do it or do you not? And at some point, that's where the rub is, right? Where you do have to end up sacrificing something to achieve something else. And so if you think you're going to be able to have all the time, all the capital, all the this, and then do both and just get it all, that's not how it works.
Yeah, literally. Like in all fairness, like just to give an example, I've got a lot of projects going on personally, and I'm a full-time trader, so therefore, like I can still trade within a couple of hours. I usually get up between 5 a.m. and 6 a.m. depending, just to get my gym and exercise out of the way. Last night, I actually went to bed at 12 in the morning. Like I went to bed at midnight just because that's how much time I needed to dedicate to some of my other projects, as well as trading and as well as just having a life. So it depends on how bad you really want it. You can allocate yourself time.
Can somebody do me a favor? Can somebody just kick Jonatan out, please? I know he's actually running the account, but if somebody could just kick him out, that'd be great. And Bully's saying time, meaning it takes a few years to crack this industry. If you're lucky, there is no one set blueprint to follow to be a success like most jobs careers. Anastasiia, please, Anastasiia, please finish your thought.
No, I agree totally with guys. It's time is just the matter of the question. How much do you want it, right? Realistically, like I don't think anyone can in this comment section. Almost anyone can say they're not spending time on scrolling stupid reels during the day, or you're watching YouTube or something like that. Just cut this stuff in the end of the day, or just sacrifice a little bit of your sleep for a so short period of time and get this done. And the same with the money. I mean, the prop firm industry is actually giving you these opportunities, right? You don't need to buy a 100K account. You can start with a smaller account that's still going to give you more leverage to maximize your returns. As long as you put in the work, you find a couple of $100 somewhere, you do some extra job, you get this a couple of hundreds, you spend it on a prop firm, you put in the work, the discipline, and you realize that you need some time to pass it, and you're not trying to flip it to 10x in one night, over leveraging, you're going to be able to do it. We all know what we need to be doing. Like, we all know what are the things we need to follow and the things that we shouldn't do. The question is, are we doing them or not? This is what it all comes down to. Like, we all know the risk management, we all know the trade management, they're over trading, revenge trading, and all of these kind of things. We all heard it 10,000 times already. It's just like, when are we finally going to start doing these things?
Mm-hmm. So is this ultimately down to what is needed, frankly, for any success in anything? Even though we know how difficult trading is this purely down to self-discipline and self-awareness and essentially making the sacrifices? As LJ given the analogy of the business, right? You want a business to succeed. First year, for that business not to fail, you've got to put in the hard graft and the hours and the energy and the effort to keep it going, to put it in, right? Are we then saying that the problem here with the social media influencer world of trading is that it is part of the wider problem, which just simply acts as a distraction rather than you focusing on what you need to do for trading? So Anastasiia just said, rather than scrolling on YouTube, looking for different videos, looking for different strategies, all this sort of other stuff, are we saying that actually the more important thing is to knuckle down, sit in front of the chart, do your back testing, do your data analysis, etc., and knuckle down? And if you've got an hour per day, if you've got 4 hours per day, you use that time productively and wisely. Okay, you might not necessarily be achieving the same results as somebody with a full-time amount of time available for this, but you then adjust your expectations, right?
To be honest with you, I think it's about a problem of every industry, because we are just talking about trading, so we are focusing on how much these expectations are created in trading industry specifically. But if you go to anything else, you go to sales, you go to how to start your own business, drop shipping, like your own brand and so on, you can spend hours of time scrolling YouTube and watching videos on how to do it, but not a lot of people actually gonna go and do it. Or some of them are gonna start, fail a couple of months, say it's not gonna work, and quit. And the same thing with trading. It's just because we are focused, I think, on this specific industry, we know the numbers, but we're not aware on how many people fail in different kind of things, just because they are not consistent enough, disciplined enough, persistent enough. They are not ready to spend more time. I think the wider problem is that Instagram and the social media created the image of fast success. It's like you open the Instagram and you feel like 10 years ago I was already supposed to have Lambo, a penthouse, and a passive income of 50K per month. and you constantly feel like you are late, you are running behind, you feel like you should have done it already yesterday, and you're not good enough. You need to, to speed up the success. And people feel like it's easy, it's quick, and they are just doing it something wrong, that they are not getting it as quick as someone else. But realistically, we don't really, first of all, we don't know if it's fake or real. Secondly, we don't see all the work that was put in behind the scenes for all the other years. So I think the fake image of fast, rapid success is what is a
Yeah.
problem, not only in trading industry, but in all the other businesses as well.
Yeah. And that's why social media, the whole influencer industry in itself has become so huge, right? I mean, Rich, you always have these nuggets of thought that come to your mind, when we've all gone off on a bit of a tangent and the discussion has flowed. What do you think about, what we're talking about here? Because you're a bit like me, not necessarily drawn into the whole social media thing. Do you think this is really a problem that people need to be really taking account of? Because we're part of it right now, aren't we? Right, we're here. Absolutely. We're here live on Twitter. We're live on YouTube, and we're talking about this. But hopefully, the fact that we're talking about this distinguishes us from the rest of the splurge, if you want, whatever you want to call it, that's out there, giving false narratives and false expectations.
I want to echo what Anastasiia said, and just nothing happens without taking action. If you know me on Discord, you've seen under my username for 3 years, it said, take action. You have to have a plan. You have to execute on that. It doesn't matter what industry you're in. You have to set out and say, this is what, as LJ said earlier, cutting the mustard. As a newer trader, you don't know what mustard cutting actually looks like. As you start to learn the work that you really should be doing, you then have to action it. You have to deliberately turn up every day and say, I'm going to do that really boring, dry work that nobody wants to do. This is why when we talk about it, the numbers drop. This is why I believe the failure rate in trading is as high as it is. When you touch on the nugget, the truth, it's not quick, it's not fast, it's not sexy. You're not going to get a Lambo within a week within trading. And if you do, you will not keep that Lambo within the next week from trading. Typically, I'm talking about as a metaphor. Easy come, easy go. If you want to build something sustainable, we talk about the gym analogy. If you want to build something over time, it takes deliberate hard work. And outside of that, there's something else which we haven't factored in: luck. Two traders set out to learn how to trade. Number one meets a wonderful mentor that clicks with that trader and wants to teach them. Number two goes it alone. They're going to arrive at their same destination at very different timelines because one gets to lap up the experience of the other one. This is why I have a love-hate relationship with mentoring in trading, because mentoring as a skill set is fantastic if you can find somebody that you resonate with. Mike, we were talking about this earlier, that even if as a mentor doesn't have to be amazing. Like football coach, can they kick a goal from 300 yards? No idea, but they can coach people to kick that goal. And it's important that we connect with those kind of people, and luck plays into that. I know in some aspects you make your own luck with trying to, with where you kind of choose to connect your closest 5 people, but there will be a random video that pops up on YouTube. That might be some of the reason why some of you are watching this today, and other people wouldn't have seen that. And that might build a relationship or a friendship or a mentoring. And next thing you know, you're in a position where you've got an opportunity that nobody else would have got. And so I think there's this film, Sliding Doors, where the moment where that lady, is it Gwyneth Paltrow, misses misses the flight.
The tube. The underground.
Her life goes in 2 different areas. Now, we have moments like that in trading every single day. The trade that just hits your TP and just misses it by a fraction and pulls back, hits stop loss. That creates a completely different scenario where a lot of us are going to behave emotionally because that trade didn't do what we wanted it to do. And it comes full circle back to expectations that we were touching on earlier. If you have an expectation and it's not met, that's where pain, that's where frustration comes in. That's where we end up typically burning bridges. And so I think, finding the right people to surround yourself with, and you need one conversation with one person once, and it can change your life. But if that doesn't come until 3 years in with trading, you might be walking around in circles. So it's, and all you can do is turn up every day, work your ass off, apply yourself, try and listen to who you think makes sense to you. filter it through your big filter that hopefully, you're not getting sucked into a whole bunch of people that are upselling you, and then go again the next day and the next day and the next day. This is 3 years of my life. I had a coach sat in a room for 7 years thinking on how to coach people. I thought, wow, I've done that for 3 years in my trading journey of just assessing information, reviewing it, throwing out the bad, and then taking action on the good. It's literally a refining process of trying to find a needle in a haystack, and that thing takes time. If you're not willing to invest into it and put time into it, how many times have we said, go do something else? The money will be easier earned in other industries. But if you're interested in this as a career and a craft, prop firms give such an amazing opening door to have access to capital that we would never have if you can trade it, not gamble it. There's a huge difference.
And that do you know what, that's a really good point, because that was one of the next question I wanted to ask all of you was, there was a recent video of some guy, I don't know who it was, who did a YouTube video basically calling all prop firms a scam, right? And literally just blanket, every single prop firm out there is a scam. And I can see people saying in the chat, where can they report, scam prop firms? There isn't regulation in the industry. The 5ers have asked and actively encourage regulation. I believe FTMO are similar in their views on that, as are some others. Do you think that? How do you guys feel about the prop firm industry? Because that it goes back to Oracle's point as well about time and capital. Prop firms help reduce that barrier to entry quite considerably to get access to capital. Obviously, we're not saying that you suddenly get $5,000. You get the leverage of $5,000, right? Or 10,000 or whatever the size of the account. Your actual account size is ultimately the size of your drawdown limit, right? What do you guys feel? Have the prop firms helped in terms of this kind of whole perception of the industry, or is this still a lot more work to do?
I think it's always... who's going to talk?
Will, go on, Will.
Yeah, go first.
I think that there's a huge amount of work to be done. Of course, obviously it's an unregulated industry at the moment, which sucks. But I'm sure in time we'll be able to sort that. But think about it like drinking wine. You can find a nice fine wine that you enjoy the taste of. However, one day you're just going to open the bottle and it's going to be vinegary. It's not going to be what you want to smell. It's going to be a bit like an egg. You're going to get that rotten egg. And sometimes we're going to get that in the industry. Don't get me wrong. Like I said, social media is a massive part to play with that. But, it is one of those things where there's bad eggs in all industries. There's scammy people, there's scammy businesses. Even in like the retail industry, you're going to get clothing brands out there that are just dodgy clothes. They're not great quality clothes and they're charging extra money for it. Just as an example, that is. But there's always going to be bad eggs in the industry. So I don't think we're ever going to be able to oust them and avoid them. So when it comes to, do we reckon that we're going to be able to sort that industry out? No. But do we think that we're going to be able to spot the obvious scams? The further in we come to regulating of some sort to this industry, then yes, I think it's going to be easier to spot the real crappy, the real bad eggs of the industry. But do I think that we're going to get rid of them? No. Is there a lot more work to do? Yes.
Yeah. LJ.
One sec, hang on.
Could I give a quick metaphor on this? So Will done the wine. What comes to my mind initially was a blacksmith. Okay, so imagine you're a blacksmith and you've got a little hammer and you're working away at your forge, and every day you're smacking this thing that you're building, you're forging, you're crafting it into the thing you want it to be. Prop firms to me is like you're 2-3 years into that journey of smashing this little hammer around, and you look around and next to you is this massive hammer. And it's like, oh wow, look at the size of this hammer. I'm gonna swing this round. I'm gonna build towards my goals so much quicker. And I think the reality of that is it takes time to bed in and build our skills to this new big tool that we're now able to use. And I think so prop firms help traders, but I think in the short term we have to learn to use a number on the screen that's typically bigger than what we're used to seeing. Like when we talk about prop firm accounts, maybe $5,000 will be one of the smaller ones that we could purchase. I wouldn't think most retail traders, especially in the learning phase, have $5,000 in their trading account. So even though we can only hit the drawdown, which is $500, we're still seeing numbers on the screen that activate our fight or flight responses. So kind of like that blacksmith, it takes time to get used to that new tool. And then we see traders trying to go from a 5K account to a 100K account. And it's like, that's quite a bit bigger. And it takes time to just sort of build that in. Sorry, that was what came to my mind. But LJ, what do you got for us?
Yeah, so I was going to say, like, Anastasiia and I had a bit of a chat about this kind of stuff earlier for about 20 minutes almost, Anastasiia, whilst we were waiting for the charts to sort of do things, right? And we were talking about the various, I don't know if you want to call them influencers, marketers, something else. I think we both agreed basically you wouldn't necessarily call them traders. Marketing, first and foremost, is their primary trying to pump these courses, that kind of thing, rather than actually being traders or investors or something firmly in the finance industry. So we kind of talked about that. We hashed through that for quite some time. So yeah, there is that. I don't know. I'm not going to lie. Personally, I don't like it. As far as these people. As far as prop firms, obviously you're getting some bleed over with that aspect, like you brought up, Mike, with certain, the regulation stuff, firms, this and that. There's some good actors. There's some that are less so. Same thing with people trying to provide courses. There are actually people that are genuinely wanting to help people learn how to trade. They started trading. They changed their own life. And they go, okay, trading typically is very lonely. They want to somehow say, hey, I did this thing. It helped me out. Can I help other people? Right? And that's completely good. And there are those people. I think it's very clear the distinction, just like Anastasiia, when we were talking about it, highlighting the difference between those people doing something genuinely and the other people just trying to push something on you in this raw sales kind of position. And arguably, it does come down to that, basic logic, common sense type aspect. And you can see that in this industry as well. Like, who are the people trying to be genuine, give you proper knowledge, proper understanding of markets versus trying to just churn anything through a tunnel, just like pump out sausages nonstop. Right, where it's just this mixed mash thing and just print them.
Yeah.
Again, like I said before, a bunch of the guys in here have already heard this conversation. Like I said, we were talking for quite some time, about 20-25 minutes about this. So I don't want to go on another thing and derail everything again. But basically rehash that, jump back in the stream. Anastasiia and I were talking about for some time. Yeah.
Is it
also?
Are we then saying... Sorry, go on.
Sorry, Mike.
Go on, Anastasiia. No, go on, Anastasiia.
I was saying that regarding prop firm, I think the other important point is that people feel like it's a scam because they break rules. They are trying to play on the edge of the rules of the prop firm. Then they refuse the payout, and then they say the industry is a scam. But if you're trying to gamble on news, if you are trying to use copy trading, if you are not trading yourself properly, managing the risk, putting in the discipline and the work, which all comes down back to your own responsibility for your own trading, of course you're gonna be refused the payout eventually, sooner or later. For people who are ready to put in the work, who are good traders, who know how to manage money, the prop firm industry gives you lots of opportunities. In the end of the day, make the money, withdraw it, put it in your own account, go on and trade. Like, no one is holding you in the industry if you are not feeling like it. Use it as a leverage. In the end of the day, like, use it as a leverage if you're not feeling like staying in here. But saying that all prop firms are the scam without actually knowing how the prop firm works in the back, it's just because someone got really hurt because they were playing on the edge of the rules of one of the prop firms or a couple of the prop firms in the end of the day.
Exactly, and that was the first thing I was going to highlight, that when I started, none of this existed. And when I say none of it, like, it didn't exist for another 7 odd years plus before it came into proper existence. Right, obviously 5ers has been around before that. But before I guess, industry, if you want to call that, really expanded and really blew up, that was much later. So I had no idea about things before that. And yeah, it was really difficult you'd have to find that capital yourself. You'd actually have to go and work jobs, put in raw savings, put that into your personal brokerage account. And, people complaining that they got, pushed away from a certain firm. It's because you're taking those dirty practices, just like you were saying, Anastasiia. And if you had your own capital, you wouldn't, either you might do that and you blow your capital, or you potentially wouldn't do it because it's your own capital, right? So no surprise, right? This should be common sense type stuff. So if you want to take the instance of saving up 10, 20, 30 grand, right, and then going and taking these aggressive practices and watch it all disappear, have fun. It's not going to be fun. It's going to be very hurtful. And then maybe we're like, okay, this is not the way to do it. So what you do have here with modern prop firms, you have a very specific advantage right now where you don't have to spend, especially now with cost of living everywhere. People complain about that in every single major country, minor country, across the globe, across the board. To try and save that kind of money to trade properly, very, very, very difficult. So take advantage. Use that time, use that opportunity properly, though. Don't abuse it. Don't just try and,
which other, opportunity on the flip side do you have? Putting your own money in the brokerage account, or going and applying to get a trade, become a trader in the fund. You know how much work it takes, how difficult it is to become a trader on the floor in a real fund. Like, that's much more difficult, and you are not gonna pass there by accident, gambling or revenge trading, over trading. Like, you're gonna get out of there as quick as you got in there, like if you have any chance. So use a prop firm industry to your own advantage. Like, get the money, get the leverage to work on your own trading further on, to continue working. Like, if you don't want it, if you don't like it, fund your own deposit and try to flip it. Let's see how that works. You know what I mean? So there are several opportunities. Like, you either take it to leave it. There is no reason to say all of this is a scam. Like, people, it's the same for me personally. It comes down to the same point. It's easier to blame someone for the lack of your own success than taking your own responsibility.
Are we? I mean, we're coming up to the end of the hour, so kind of just final thoughts, maybe just to take away. There's a lot of talk about AI. There was comments about AI in the chat as well, about, is it going to take over trading in the next few years? And, Jonatan was even commenting about AGI, etc., etc. There was a podcast I saw the other day where they were talking about, it was Deri, the CEO, talking about the benefits and drawbacks of AI, and how it's going to damage our brains, bring on early onset dementia and everything else. I feel as though trading is much like the use of AI and anything else for that matter. And technology and mobile phones, all these wonderful things have brought us a lot of convenience and a lot of speed and things like that. But they've also made us really, really, really lazy and looking out for the easiest option possible to live an easy life. Now, I'm not saying that you shouldn't have an easy life or anything else, but what I am saying is that maybe the discussion that we've had today summarizes the point that if you want to succeed in trading, or frankly for anything, you've got to have the discipline and the effort and the hard work to actually make it work. Otherwise, you're kind of just banging your head against a brick wall, aren't you?
Rich.
Don't know. Final words. Final words from Rich. Final words for Rich.
We singled out me. So It's basically just watch back everything we've spoken about. Nothing's going to come easy in this space. I saw in chat actually that we get bad brokers as well. Like every area gets its it gets feedback for bad actors, and so find someone who you vibe with. I see comments in chat saying, "Hey, you guys sound pretty cool. Maybe I'll try out the 5ers." Remember, there's really really small accounts. You haven't got to jump in head first, and it's always if you can hear someone saying go for it, absolutely slam it, and then the person is like, look, relax a little bit, maybe take your time, consider it, take a breath, take a pause. Ultimately, you're going to make the decision that's best for you, and the best way you can do that is when you're emotionally neutral. So exactly the same with trading. When we've got an oversized trade on and we're sitting there trying to make our next decision, it's likely not going to be the best one. So take a step back, look at all the information that was presented on these ABLs. You can see that there were loads of live streams on the ABL. There's been loads of live streams on the Thursdays on these sessions as well. And just see whether you found somebody that you connect with. If you have, lean into it. If you haven't, move on. Don't waste your time. Move into something else. Find something else that lights you up. Because trading done wrong is incredibly stressful. Trading done right is a beautiful thing, but it is very difficult to do it right.
Dude, yeah. Anything you do in life is going to take work. It's going to take effort, career, family, friends, anything you do. Trading is no different. There's no holy grail secret sauce. You do this one thing and it's done, right? Anything good in life takes that effort, takes that input. And that's probably the most basic takeaway, which should be, again, one of those very common sense things. You learn that after a piece of time, but something you have to rehash again and remember that and recall that and go, yes, this is the same as all that stuff. I need to do the work.
Yeah,
simple as that.
Absolutely.
Yeah, literally. The better something is, the more work it's going to take and the harder it's going to be.
100%. 100%. Anastasiia, Rich, Will, LJ, and I was going to thank you all, but Jonathan's now jumped in. He's going to probably say something and interrupt me. But thank you all for joining. Great to have you all with us. Really appreciate it. And yeah, it's been a pleasure to do these ABL podcasts. As I said, this is the last one. We're pausing ABL. You won't be having these podcasts on here anymore. But Jonathan has got big plans for lots more content and lots more segments coming up in the coming days and weeks ahead. You'll see a lot more of LJ, no doubt, and Will alongside LJ and the rest of the team. I shall be signing off. I will be somewhere out there in the outer world of the internet, in the trading internet and all that stuff. So if you seek me out, I'm sure you'll find me somewhere, being a degenerate as always. But guys, once again, thank you ever so much. An absolute pleasure. And we'll be right back after this.
Thanks, Mike. Cheers, guys.
Peace.
Well, hello.
Hello. Wow, I'm big. Look at that.
See you guys. Ciao.
It's a big face.
Look at this guy. Look at this guy over here.
I wanted to jump in and have some fun with Mike, because this is going to be his last session. He really tried everything that's been doing. What is this? This is me? Mike, come on, Mike. Right, so that's the final goodbye from Mike, letting him know that.
Here.
What?
Okay. Oh, now LJ's gone.
All right. All right, how's it doing, Will? How going? How's
Good, mate. Yeah, not too bad. Yeah, good, man. How's things?
Well, LJ is laughing in the background. That's not. I'm just gonna turn off that background feed. Yeah, all right, guys. So last ABL session. Mike's he's gone. He's gone. So it's just I don't know how I feel about that. what are we gonna do? Like, there's not gonna be, I'm gonna miss his conversation about that perpetual drawdown. Never being able to get it up above that break-even line. Just being in a loss forever.
Yeah, I know how he feels. No, I've been the same on my account. I've been like 5% down for like 2 months now. I'm like, oh, just get me out of drawdown already. All my other accounts are healthy. It's just that account is just like 4 or 5% drawdown. I'm like, oh my god. I scaled into it yesterday as well. I told the guys yesterday that I scaled into EJ. And I was like, oh no, my scaling is now in drawdown. I'm like, oh dear.
I'm gonna open up your chart here, and I haven't the time to set up my laptop setup here, so I'm just gonna do that quickly, and I'll be back in just a minute. So where is it? Let's see. Is it this one? Maybe it's this one. Let's see. Nope. Okay. Well, let's make it this one then. Just give me a second here, and I'll figure this out.
I think I got my own one now, haven't I?
So what?
I'm sure I got my own one now, haven't I?
All right, that should be good.
Sweet. Yeah, I can see it now. It's better.
Well,
Alright, sweet, man. No worries. Yo, what's good, guys? I'm doing it solo now. You have to look after me here, guys. Guys, I was so frustrated yesterday when we saw that. It was like late last night. I was sitting on my desk doing some admin work and just doing like some sort of like life admin. I was thinking, I gotta try and sort something out here. So while I was scrolling through, I had my charts open, and then I just saw this drop into drawdown. I was like, what have I done? And I was like, should I be out of this? Should I be in this? So, I mean, we have dropped under the EMA now, which sucks. We are still in a little bit of profit, but I think we're about break even on the account. We were about I think we were about $1,000 up, or like $1,600 up overall when we hit the peak just up here. So to see it come back down to drawdown we were chatting about the life of a trader and trader expectations earlier on with Anastasiia, Rich, and all. And guys, it sucks, man. It's one of those really crappy feelings where we can do all the good work and we can put all the processes in, and it still may end up just taking us on an L journey. So I've been in this now 3 weeks, give or take. So I think it's the 4th of August I entered in this trade. So as of next week, I'll be in this an entire month. So the month of August, I've actually been in a EJ trade, a Euro JPY trade. So it turns out it may take me out for a loss. So I mean, that's the good thing and the bad thing about swing trading. It allows you to just completely relax and not stress about the trades. But at the same time, it can take a month for you to hit a stop loss. So. Nonetheless, guys, the intradays are still there and they're still going. I was a little bit late into this one. So this is my intraday trading strategy. A little bit late into this one, so I didn't actually take this, but I did draw it up. So I think when I drew it up, we were actually already here. So guys, I'm going to be completely honest and upfront with you guys. I've not taken this trade, unlike the other trades. This is a very late to the... this is almost like a hindsight trade. It's a very late to the party sort of trade. We did come up and nearly hit a 2R TP. In fact, would I have actually hit it if it was bang on 2R? Oh, I would have hit a TP. But I think we're like 2.19 or like 2.2. Let's put it at 2.2. Oh, there you go, 2.18. So that was a 2.18 TP. And then we came down. We were so close to hitting the TP. So had this been a full 2R trade, we would have hit TP by now. But like I said, I'll be completely honest with you guys. This trade, I was late to the party and I didn't take it. But I wanted to draw it up and just see how it would have played out if I had a 2R TP. So that's the only intraday that I've been sort of drawing out. I think the last trade, in fact, Euro was really nice yesterday. I think I drew this up yesterday during the stream. That was really cool. So we sort of got this consolidation. I was like, guys, look, I'm not interested in buying this unless we have a break and close above. We did get a break and close above. This one wasn't too nice. We pulled back. Then we got a better break and close above. Pulled back. You could have got some awesome entries in. We had 3 opportunities to enter into this long. And then, guys, price just moved. Price was really nice. I mean, I think it was LJ and who else was in with us yesterday? I can't remember now. we had a new guy in I hadn't met before, so it was actually super cool to meet him and stream with him yesterday. He wasn't looking for anything other than euro to start buying up, so he did. I don't know if he got in the end, but he did get his price movement he wanted to get in on. So that was super cool. I didn't get any trades yesterday because I was actually out for the day. Aaron, that was it. Yeah, so Aaron actually got his opportunity. I don't know if he got in. But it was super cool to see that the euro did actually end up doing some bullish price moves on the 5-minute all the way up onto like the sort of hourly and the 15-minute. There was no opportunity for me to get in on any time frame above the 15-minute. I was just looking now. I mean, we could have had a buy stop, I suppose, or a limit. A market order, but there was nothing that nice for me to look at. However, the 5-minute was super cool price action. If you were looking at it for a breakout, awesome. If you're looking at it for a limit order as a retest, really, really cool price action. And then we did get price moved to the upside. Where would I probably target low hanging fruit for me? Probably would have been this high here. But nonetheless, I didn't take it. But nonetheless, even though I didn't take this, it was super cool to watch price move in the direction that I predicted. So that was really, really awesome. Other than
it's
that,
nice.
My trade,
isn't it? You have some analysis and you see that prices is following that analysis almost perfectly. It doesn't even matter if you're in the trade. It's just that your analysis will right.
Literally that. Like sometimes you don't need to be in. Sometimes it's just good to draw it out and it plays out. You know, sometimes it's like, wow, my overall bias was correct. Like that deserves a pat on the back in itself. I feel like a lot of us traders don't give ourselves the credit we deserve, especially when it comes to bias. You know, we all want to try and time the market perfectly, but trying to find a good bias, that takes skill, you know, so we all need to give ourselves a pat on the back for
that. This trade that we're looking at right here, would that be a breakout trade?
Yeah, this would have been a breakout trade. I mean, we could have gone, like you guys by now I'm sure know that I like my fibs. We could have had a fib, could we? Oh, we would have missed just about. We would have been missed, but yeah, we could have tried to come down for a pullback. You know, we did have some weird price action going on here this morning before 9 a.m. So the market open for London for me wasn't that great, so I didn't find any opportunities. But I mean, we did break above the structure, starting to show and form, you know, bullish price. And then we got consolidation. We sort of tried to pull back. We didn't quite get as far down as maybe I would have wanted it to. So my golden zone, as I call it, my sort of fib and order block / consolidation zone would have been around here somewhere. So I probably would have been missed on a pending. But we got the breakout trade. So that's pretty cool.
Nice.
Again, missed it though.
So what would be the? I mean, you said here we added a couple of fibs, but when let's say that price action would come down into a fib, wouldn't that be? Would you still consider that to be a long? Would you still consider that to be like a breakout structure to the upside? It's still a bullish structure.
If we fib this now, as in if we got
like you showed that fib where you
down here. Yeah. Because we broke the structure here, I would have been seeing this as an uptrend. Yeah, I would have been seeing this as that sort of shift into an uptrend. You know, even though we broke out and broken close below this consolidation, that I would have been a bit like, and ahhing. So therefore, I probably would have liked to have seen wicks. So in fact, let me just draw it out. What I probably would have liked to have seen is, you know, come down into this consolidation here. Let's get a fib going. Here we go. So let's get a fib on my golden zone. I would have liked to have seen a sort of something like this, you know, price to, you know, come on down and then had like wick, then seen price move up, then pull back, then continue. That's probably what I would have liked to have seen in an ideal world when it comes to my limit orders. You know, I like to see a little bit more struggle to break below, you know, struggle to continue on down. Then I like to see maybe that's probably when I jump onto the 1 minute. And then, in fact, I mean, I suppose on the 1 minute, you're actually getting some nice price action. You know, we got wick, break above on the 1 minute. So we would have broken 1 minute structure. Then I probably would have looked for maybe one more pullback into this sort of break and retest and then continuation upwards. That's probably what I would have been looking at. But That's what I mean by like A+ setup. You know, it doesn't often come. You know, I can trade 3-4 trades a month sometimes with this strategy, and that's on a pretty good month.
So how come you didn't take this trade in?
I wasn't at the markets. I wasn't at the markets. You know, I came in, and I think I joined the markets about 11:15, which would have been this candle here. Oh no, go away. No, not that one. Here we go. Come back down. So this candle here, I would have been at the markets, and I just would have missed this. So I saw this breakout here, and I thought, okay, you know, if we get a pullback into this area, then I'll enter in. But this move here, I've already missed the move, in my opinion.
Yeah.
Which sucks,
you know? I mean, that's a typical breakout trade where you have. That's the type of breakout trades that you want to get in on. You know, the high momentum when there's a breakout and you see that continuation of that momentum, and it just continues, right? I think I remember. I think it's Peter Brandt that I think if it's what was in Market Wizard or some other interview where he said like he has a like ridiculously low win rate on his breakout trading, right? And that's because he wants to get in a breakout that, you know, there's a lot of force and momentum behind it, and if he can't see that momentum immediately, you know, he's going to get out of the trade or just, you know, move stops to entry. So we're talking about like a sub 30% win rate, you know. But then if you get trades like that with a tight stop loss, you're going to have high risk to reward trades. I think that's really, I think that trade right there is a great example of a perfect breakout trade. That's what you want to see.
Yeah, that's where you want to see every trade that you take. You know, if you're seeing something a little bit lower probability, then it's like, okay, you're going to start questioning, like, you know, whether it's like this would to me would be an A+ setup. You know, it's a shame it didn't come down here. That would have been an A+ setup on a retest. You know, if we could come down here, you know, I'll probably put my stops at the low, target maybe a 1-to-1, maybe a 1-to-2 if I can. 1-to-2 is up here. But then if I jump up onto the 15, and where am I going to be looking for that if I get my horizontal line? There we go. So I'm going to be...
Well, I'm gonna have to jump up. I'm gonna get my kid. Gotta go get my kid at the bus, and I'll be back in maybe 15 minutes or so, and I'll be doing the giveaway and everything. So I'll be back in 50 minutes.
Yeah,
all right.
Man. Yeah, no problem. Awesome stuff.
See you soon.
See you later, man. Hello, everybody. Like I was saying, though, guys, you know, I'd be chasing this back. I was looking at it and I was thinking, I don't know if I want to be chasing something that high up. Like, I like to look at a lower risk to reward the larger my TP, the larger my stop loss. So here you can see it's a 17 pip stop. For me, I'd probably be looking at a 1-to-1. So if we brought this back down to a 1-to-1, let's move this back down. There you go. So a 1-to-1 would have been there. And again, you know, you're hitting TP, your chance of a pullback, it's looking pretty good. But then, boom, you get that momentum shift up and then you're away to the races. But to me, that wasn't as nice. So for me, if I look at the 5-minute, that was beautiful. You know, we got that consolidation. We tried to pull back, which was a real shame we didn't. And then, but what that did give me was that breakout here. And then could have entered on here and given me that perfect place to put a stop loss. Because if we just had this consolidation here, my stop loss potentially would have been a little bit higher up, would have been about here. I mean, give me a 3-hour trade, but the potential of this being swept is quite high. So I was quite happy that it didn't, and it gave me a perfect place to put a stop, which was really cool. Let's have a quick catch up. The Oracle saying, check the 15-minute for that trade, Will. Let's have a quick look. The 15-minute looks okay. You know, the 15-minute. If I looked at the 15-minute, I probably wouldn't have actually taken this trade. If I'm looking at the 15 here, I mean, we could have put the consolidation a little bit lower. Again, I still would have taken this at this zone here. But for low-hanging fruit, I probably would have taken it at this high, giving me a 1.18. But we're like, yeah, my stops. Yeah, my stops probably would have been where they are. Just a little less confident. You know, the 5-minute was where it was at for me. We're 1 to 2 hour. Oracle, I'm guessing you took a similar trade to this. If you're saying look at the 15, I'm assuming you've taken something very similar. I follow that on gold many times, but most of my trades is a stop out by poor SL. Finding a stop loss it is a skill. Like I said, finding a stop loss is probably easier than finding a trade analysis. The perfect stop loss trace placement. It's meh. It's quite a difficult thing to do. But honestly, when it comes to me, placing a stop loss is finding where the trade is invalid. So if we look for an invalidation, so what is going to make that trade invalid? So if you saw price and you saw, let's say you were seeing this as a buy, at what point would you see this trade? Okay, so we got buys here because, we're breaking structure here. We got the breakout trade. Where would you see, like, if price got to a certain point, maybe down here, you're like, oh, okay, I'm not going to take this because it's showing that potential downtrend. If that's the case, then that's where I'm putting my stop loss. And it is literally that simple. It's an invalidation for me. Let's have a look at gold. I know Mike took a gold buy earlier. That was really cool. I saw he got in. I think he got in on the 1 minute. That was super cool. But looking at this, man, I don't like trading gold. I really don't. Let's have a look. I mean, we are similar on gold, mind. If we are breakout trading this, we have got this consolidation. We got this consolidation here. I mean, we could pull it all the way down here, meaning that we've got this breakout. It depends where you want the breakout trade to be. If we're gonna have a breakout of the consolidation or maybe the close, it depends. You're not gonna get the pullback. We didn't get that pullback. But, a bit of breathing room at the bottom for a stop loss. Were you chasing 1 to 2R? I mean, yeah, okay. Boom, you would have been taken. You would have hit TP on that. So that's pretty cool. In fact, that's probably a perfect TP there. If we try and... Yeah, you're not going to get the 1 to 2R if you're on the breakout trade and the break and close. Let's have a look. Okay, yeah. I mean, we'll hold it there anyway to see if this trade will play out. We're slowly starting to lose momentum. If we can get a couple of wicks to the upside, in theory, I probably would have closed this. But let's see if we can actually take this to the upside now. Let's see if we can hit a TP here. I don't know if we will, but we'll see. Let's see if we can theoretically play this trade out. Let's have a look at the 15. See what's going on. Let's have a look. I have to jump up into the 1 hour. Onto the daily. Okay, so we've got that level on the daily. We've got this wick here. Let's have a look. See on the 4 hour. Okay, on the 4 hour, this could really play out quite nicely, but it depends on the pullback. Do we need a pullback before taking this high? I don't think so, actually. I mean, we could get this then. We could get this 1 to 2R. We'll see. We'll put that there. We'll hold it. See what happens. I'm just going to check my UJ trade. Jump up onto the 4 hour. It's making me a little bit nervous now with with how many wicks to the upside here. We'll see. We'll see how this goes. I'm new to this software on the back end as well. I wonder if I can put some music on. I hate streaming on my own. I can hear the sound of my own voice. It's like talking to myself. Sometimes I feel like I go nuts. Let me know if you guys want me to look at anything as well. I'm predominantly a EUGU trader on my intraday. Let me have a look at the US. Let me jump on. Okay, that's looking quite nice. So my stop on this would have been trailing alongside the EMA. I'm not sure if you guys can see the EMA. Let me try and make it a little bit brighter for you. I don't like a bright EMA. I feel like it distracts me too much. So let me just... There we go. This should make it a little bit... My door's open in my office. I don't know if you can hear my dogs barking. Yo, Vinny, good to see you, man. How you doing? Let's have a quick catch up with chat. Who's in? I like William. Oh, thanks, man. One day I may be alongside you guys trading, dude. That'd be sick. Yeah, let's make it happen, man. That'd be super cool. I don't know if you can. I think the postman's coming. My dog's going nuts at the postman. Yeah, it's the postman. I can hear him. Alright, give me 2 seconds. There we go. I've closed my door now. Hopefully the postman hurries up and comes in goes because they're quiet. They're quiet. That's fine. I think he's gone. Sorry about that, guys. Right. US 30 looks pretty cool at the moment. 2 to 2R, 1 to 2R. Sorry. Again, very similar strategy I'm using on this with my UJ, EJ really early. We just got nothing but consolidation. I would have actually hit a stop loss on this. I think I closed at this level here. You can see that I've put a trend line. NASDAQ, I don't really trade with the strategy. I have tested it a little bit, but it's not something I trade too often with. You can see we've got a couple of nice ones here. So 11R, 9.93R. Again, these are like held over a couple of months. And I mean, we're technically still in this, although we could actually, because we got a break and close under, we would have closed here. So this would have been probably like an 8R, I think. Yeah, 8.9R trade. Okay. So look at the Dixie. What's the Dixie doing at the moment on the 4 hour? Okay, so we've got dollar weakness coming through. So what's the time now? It's 3 minutes to 1. We've got high impact news at 1:30. This is UK time now. So we've got prelim GDP, unemployment claims, and they're both high impact. And then we've got medium impact prelim GDP price index quarter on quarter. And then we've got a couple of others. 3 p.m. we've got pending home sales. All of this is for the dollar, by the way, guys. That's medium or orange folder. This is Forex factory that I'm looking at as well. And then 11 p.m. we've got FOMC member Wallace speaks. So that's going to be super interesting to see how that turns out. USD JPY, I can definitely look at USD JPY. I'm trying to catch up with USD JPY for the upcoming news. Let's have a look. USD JPY, let's stay on the... In fact, let me lock this. There we go. Right, let's stay on the 15. Man, I mean, USD... we got a lot of weakness in the US dollar at the moment. I'm kind of hoping New York session we're going to see a bit of dollar strength coming through. I mean, which wouldn't be too great for my GU trade, but if we can get some dollar strength coming through. Where is it? USD JPY. There we go. I haven't actually looked at the forecast for unemployment claims. Unemployment claims isn't one that I'm ever too worried about. I mean, there's a bit of volatility that comes into unemployment claims, but for a red folder news, it's more of like the sort of a severe orange folder or a very light red folder news. What do you think of New Zealand US dollar? I'm in a 1 to 2 long right now. Let's have a look. So I don't have that in my watch list, so I'm gonna have to have a look. New Zealand dollar, US dollar. Yes, let's have a look. Let's go with the no under market. You're in a long 1 to 2R. Let's have a look. Let's stick on the 4 hour and then let's do a bit of a top down. Okay, so 4 hours a little bit ranging at the moment. We're coming up to some nice significant highs though, which is super cool. So I'm just going to mark that out as a potential target area. That's super cool to see. Jumping down to the 1 hour. I mean, the 1 hour is super cool. That's starting to show a little bit of bullish information here. So we've got a bit of a consolidation where that ranging market showed a little bit on the 4 hour. It showed its hand. So that's pretty cool. We've got a breakout, which is really nice to see. It's showing a bit of market direction to the bull side. Obviously, that's going to be a little bit influenced by the weakness of the dollar as well. Okay, that's super cool. Let's have a look on the. Are you on 5 or 15 minute? Let me see if I can. Vinny, let me see if I can guess where you've actually traded from. Let me know if are you 5-minute trading or 15-minute. What have you actually placed the? What time frame have you placed the trade on? And you're long, so let's get the long out. I'm guessing you're going to be stop loss is going to be at this low. I'm assuming so. So lower the consolidation. Your 1 to 2 are. Let's have a look. Okay, we haven't quite got the breakout here. When did you... have you only just entered into the long, or have you been in the long for a while? Let's have a look. If you've been in the long for a while, it may be... So a quick catch up. Nice risk reward, William, but how is your swap? On EJ, it's positive swaps. On Euro JPY, I've actually had positive swaps. On US 30, I got hammered on my swaps. Yeah, that's why I closed out super early. 5 min. Okay, let's have a look then. So let's jump onto the 5-minute. Bit of a pullback area. Got 2 wicks here. Potentially. Let's have a look. I mean, that's 1 to 2.25. Let's go 1 to 2. Assuming you're intraday trading. And assuming you're going to put the stop loss at the low here. Because in theory, that's where the long would be invalid. Unless you're scalping it a little bit more. I'm going to go with this is your trade, Vinny. I'm going to go with you've entered in. I'm going to go with you've entered in at 0.58643. Stop loss at 58535 and TP at 58867. Let me know how close I am. That's going to be super interesting. Let me know how close. I mean, so far, I think there's going to be a bit of a pullback. I think we're going to need to sweep these lows here. If we haven't already. No, I don't think we have. I think we're going to have a bit deeper of a pullback. There we go. So I think we're going to have almost like a break and retest of this. No, go away. There we go. Come back. There we go. That's better. I think we're going to get a break and retest of that zone there. So potentially, like I said, depends what happens with the New York Open and dollar strength. Something like that would be pretty cool. So I think the longs are looking quite nice, Vinny. I'm hoping that it's going to do you well. Let me know. Let me know how you get on. Chuck it in the Discord or something. Go gold. Let's have a look. So let's have a look at gold right now. Mate, gold is looking nice. We've marked this 1 to 2 trade up. So it's long on gold. Again, guys, I've not taken this. I've just marked it up just to see what happens. It'd be super cool to see if this actually hits the TP now. Let's have a look at the 15. I mean, we're wicking to the 15 a little bit more than I'd like to. So, I don't know. Like I said, gold can be so unpredictable sometimes. You know, I'm not too keen on gold. Like, this could just absolutely melt. Let's have a look at what GU's doing. Yeah, look at GU, mate. It's just a bit meh. It's a bit I don't know if I like gold too much. Sorry, GU too much either. That's what I mean. That's why risk to reward ratio is so important. And this, I can't stress this enough when it comes to like looking at low hanging fruit. So if we're looking at like areas that we want to target, you know, getting out of the trade is almost more important than getting in the trade. You can get in as many trades as you want, but if you're gonna greedy and look at trying to take too much from a trade, potentially you're gonna end up giving away more capital or more equity than you initially wanted to. So this is what I mean. Because I only, you know, pretty quickly drew this up when I jumped on the markets. I looked at this and I thought, oh, okay, there you go. There's 2 hour trade. You know, boom. Turns out it was 2.2 or 2.18. I ended up missing out on potentially 2% of capital. So there we go. Just about missed me. And now it's come back down and it's now floating at what? just under, so about 0.9%. Whereas if I actually precisely placed the trade at a 2% or a 2R trade, I would have hit TP by now. So it's super important, guys, that like we concentrate when we're trading. And too many times I've given profits away because I've done a quick analysis, done a quick TP stop loss, and then I've either over risked, or I've put the TP in the wrong place, or I've even put the stop loss in the wrong place. Maybe too much of a stop loss, and I've ended up putting it too low down on a long, and then I've been taken out for maybe 1.5 or 2% because I've not concentrated on my trade. So it's super important that we not only do we take A+ setups, but we actually try and take the trade seriously, because at the end of the day.
All right, I'm back.
Hello. How you doing?
Hello. Oh, you're still on that breakout trade.
Yeah, well, we've looked at XAU now as well. So we've plotted. We were just chatting about a similar strategy on gold, but one of the guys was saying that he's hit stop loss more times than not. So I thought we'd just plot up a gold trade. And I was saying I don't trade gold too much. And then we just jumped onto my euro trade, which has now finally gone into a little bit of profit. If we look on the 4-hour. Making me a little bit nervous with the lack of volume and the slight channel to the downside. So we're going to see what happens there. We have broken under the EMA, so I may take this out soon. UJ would have hit a stop loss, so glad that I took this in a slight loss. And then US 30 is looking fantastic. The only issue is I got absolutely shafted on swaps on this. So...
Right, yeah, that's the issue when you're holding for too long. It's gets expensive. Usually, what I see is, let's say, if it's a good trade, it's a few weeks, But when it gets into a month and longer, the swaps can really start eating up. If it's especially if it's just start ranging and it's not really doing much,
Yeah, literally that. But in all fairness, like it ranged for a little bit. And then it moved up into profit. I took out, and I thought, okay, happy days. I took out for a couple of $100 in the end, so it was just less than 1%. But quite frustrating then. Ended up, we're now floating just under 2%, but it saved me so much money in swaps.
Yeah. Now I'm looking at Euro JPY here, and I think on the higher time frames, I'm thinking we're potentially going to see we're seeing a distribution pattern here. And we keep hitting that support, it's it's like 1, 2, 3, 4, 5, 6 times. We just keep hitting that support. So I feel like with the fact that we're very, very high on the higher time frames, so we keep hitting that support, and we're building sort of like a good case for a short setup, I believe, in perhaps next week. So I wouldn't look for longs here. Yeah, thank you.
Yeah. Nice.
So we have on the weekly, we got this big move to the upside on that big move. We got the first massive bearish engulfing candle here on the weekly. What I like about this is, or not like, depending on what direction you want this to go, but I'm looking for shorts here. And if we add the fibs here, I'm not sure what fibs are you looking for? You're looking for the 0.618 and the 50, or which ones are you looking for?
The 6.1 and the 7.1, I'm pretty sure. Let me have a look. I have to get
61 and 71.
Yeah, 0.61, 0.71. Yeah, that's okay. I found through my testing that's a nice little sweet spot.
Okay, so it's pretty much the same as I have, but if I remove that one, we're basically looking at the same fib, because I got the 0.618 and the 702. So so very, very similar to yours. And then what I do is I add I just add that 0.706, so it kind of becomes an area with that 0.702 in the middle here. What I like about this is we had that bearish engulfing, and then we came up and we had a retest of that area on the higher time frame. So basically that area of the weekly bearish engulfing candle. And then if we go into the lower time frames, you can look at, for example, the 4-hour. We see that we do have lower highs, kinda. Well, in a sense, we kind of got lower highs here, and then we just keep on hitting that support over and over again. And I'm not saying, okay, so this is not the setup. This is just something I put on here. But what I'm thinking is we do have a few levels here to the downside that I would be interested in potentially targeting if this breaks down. So if we do see that we have perhaps a daily candle closing below, I would preferably I would want Friday's candle to close below, because that would also mean that the weekly candle is going to close below the low of previous weekly low. So adds a little bit to the break of that support. And if that's the case, we get a few good levels here to the downside. I think we can use as a target. So that's one of the ideas I'm watching in going into next week here.
Yeah, depending how the lower time frame plays out in correlation with the 4-hour, is I'll probably looking at getting out relatively close to where price is now, just to save myself from hitting that stop loss.
We got someone saying gold is really on fire right now, and I do actually have a trade that just hit TP here on gold. So this one was entered 2 days ago on that breakout. Almost took out that stop loss, but it hit that TP today during not long ago. So if you guys remember, if you I guess when was that? The 19th. So last week, the beginning of last week, we talked about how when we looked at that daily bullish engulfing candle, so we had that daily bullish engulfing candle on the 0.618, overall trend line right here, and we had that break above that descending or that falling wedge pattern. And now we're trading at those highs. Now we went up to that those range highs. So what we have here is sort of like, there's a lot of different patterns here, but you can look at it as a range. If you look at these dotted lines, we have a range, we have that falling wedge, we have a ascending triangle as well, with the resistance being up here and that being the trend line. And I think what happened here was a type of ascending triangle pattern is playing out. Not playing out because it needs to kind of break out, but gold looks very, very bullish. Yeah, it looks very. I remember you saying that you wanted like a massive move to downside on gold. Would that? I guess that would be invalidated if we get a breakout here, right?
Yes. Yeah. That was more on the fundamental side as well, on a sort of weekly, monthly time frame sort of thing.
We're supposed to have Deri coming on with us here, but he's having some Wi-Fi issues. He's not able to join. Well, you're free to stay, but I know that your session is over, so that's completely.
I'll keep you company for a little more, but I'll go have some lunch then. I'm starting to get hungry. That's usually when I can tell it's time to jump off, is because I get a little bit hungry. I fast in the morning, so I don't eat breakfast.
Right.
So usually, like when my stomach starts rumbling a little bit, I'm like, oh, it's got to be close to 1 o'clock. I'll shoot off now. But I had an orange. I had an orange this morning, so I probably got another 15 minutes in me.
So you're fasting in the morning, so you don't eat between dinner and lunch.
Yeah. Nice. Yeah.
How long have you been doing that?
Oh, years. Yeah, years.
Wow.
Yeah, it started on my door days. I used to do security, so I used to be on the doors, and obviously I wouldn't eat. I'd finish eating about 1-2 a.m. and then I wouldn't eat until lunch. And then once I finished doing the doors and went full-time trading, it was more just I'd have dinner, and I'd have a late dinner, 8 p.m. and then work for a couple hours on the desk, and then go to bed, wake up, and then just try and fast for as long as I could, and then usually lasts to about 1 p.m. unless I'm gymming it in the morning, like boxing or something. If I'm boxing, then I'll try and have something.
Yeah, I've tried it. But I definitely, I like breakfast. I like coffee, egg. I love it.
Yeah, nice. Yeah,
I like that breakfast. And for me, it's like that time in the morning. I drop the kids off at the bus. Fiance goes off to work, and I get I'm working from home. I got the whole and I'm like got that 45 minutes by myself. I got my coffee, got my breakfast. I love it, but I tried. I do feel good when I'm intermediate fasting, right? So
yeah.
it does feel really good, but it's difficult to do it consistently, really.
Yeah, absolutely. It depends on how active you are as well. Because, like I said, if I'm just going to the gym in the morning, I'll fast. But I box in the mornings at like 6 a.m. as well. So when I'm boxing, it's super, super like straining on my body. So I'll get home and I'll have to have like some toast or an egg or something like that. Because just
definitely no. I wouldn't be
trying to suffer until lunch is just not okay.
Yeah, exactly.
I'll end up raging during a stream or something.
I think what we have here is we have a pretty solid breakout on gold. I'm looking at that level right here and thinking, if I feel like either gold is just gonna go down here and then continue, or it's gonna come all the way down here before it shoots up. For me, I feel like it's very difficult to trade gold because it's just all over the place. And when you find that right setup, it usually front runs the level or completely overshoots the level, takes out your stops, or just doesn't enter you into any position. But I guess sometimes it does happen. Sometimes it does come down and really test the levels very nicely. Like for example, we have here on the 15 minute. If we would assume that that's the breakout level, then we have a perfect retest right here, like just absolutely beautiful retest right there. And I guess we can see another one right here where we have a breakout level right here, comes down, test that level like perfectly right here. So the question is, will we test this level again before continuation? If we do come down and test that level and maybe get some type of price action that will look maybe like this, with sort of like a rounded bottom here, then I think that would be a really good entry for a move up to the highs of this resistance zone, basically coming up and perhaps testing the all-time highs area. I think that could be a possible trade for the day. We do have some news events coming up. Is it tomorrow? Is it today? I gotta check that. I'm not sure. Let me take a look.
I'd love to see what happens with gold when it gets to 3409.43, which is just a little bit higher than where it's at now.
Like here?
Yeah.
Yeah.
I think we could have a large pullback from there.
Are you talking about like this, the high of that wick, or lower?
The high of the wick. Yeah, or if you go into the 4 hour, you can see that wick high. It's trying to chase up to. I think we'll have a pullback after we've taken that.
Yeah, that makes sense.
Yeah, I think that'd be super cool.
Yeah, if we do get a pullback, yeah, exactly. We might get something where we move like this,
Yeah, exactly that. Yeah, that I think would be super cool to see.
So, you know what I like to do sometimes? I like to try to anticipate where the high of the move will be, depending on where the fib of the breakout is. So if you do this, if I add the fib so this is the low of the breakout move, right? And if I add the low of the fib here, and I just increase the fib to the upside until my zone is right in the breakout area, I would put it right here, and then it would be around this level. Wait a minute, I can add. Okay, so it would be 3 for 13. So according to that, it would be up here. So if price goes like this, hits that level, then that will be the 0.618 will then align perfectly with that breakout. So putting a fib on a move that hasn't happened yet, but you put the fib on the move in anticipation of that being.
I like to do that sometimes when you put the fib when it's not quite finished the move, but you're anticipating on where it's going to finish, and then you're okay. If I'm going to assume it could finish there, I'm going to put the fib and then just do like a future analysis on what you anticipate could happen.
So we do have U.S. Initial jobless claims and U.S. GDP coming up in about 10 minutes. Mm-hmm. So that can definitely move the markets.
Yeah, absolutely. Anyway, guys, I'm gonna have to love you all and leave you. I'm gonna go have some lunch now. What I'm gonna do is I'm gonna leave this gold trade analysis on. I'm not actually in the trade, of course, but I'm gonna leave the gold analysis on, and you guys will have to let me know how it gets on next week. But in the meantime, guys, thank you so much for having me on. And Jonathan, I shall see you later, mate.
Yeah, take care, man. Have a good lunch.
See you later, guys. Have a good weekend.
All right, guys, what are we watching? Let me know. Let me know in the comments what we're watching. Let me see. I got some stuff I got to do. What's up, man? Got some US traders in the comment section. Welcome, everyone. We got we're now open to the US, so we can welcome all the wonderful American traders into the 5ers again, which is super exciting. I'm gonna give you all the third word of the day. The first one and the second one has already been released, and the third word of the day is volume. That's right. Third word of the day is volume. So you put all the three words together, and that's your giveaway. That's your chance to enter the giveaway. The giveaway is going to end in 1 hour and 30 minutes. So make sure you go in and join that one. Right, let's see what we get on. So we have Talent says Euro JPY, SVP format says XNG USD. What's that? What's XNG USD? Is that maybe it's just typo, or maybe it's actually is something. I can't remember. We got Euro USD, CAD JPY. Nelson says, is this a valid entry? Gold short stop, sell stop entry 3004. Well, I'm not going to repeat that. Let's just go in and take a look. Again, third word of the day, volume. Okay, so let's take a look at this then. Let's put the setup on the chart here. $3,406.4. It's your entry. Your TP is going to be 3401, and then your stop loss is going to be at 3409.1. I don't think that's a valid setup. No, I don't think that's a valid setup, because only breaking this. So because of the price, because of how price action looks on the 15-minute and 5-minute, I assume that this setup was found on the 1 minute. Now, I'm gonna say that it's not a valid trade because of the way I'm trading and what I see in price. Now, it might be a valid setup to you, but I do assume that you're asking this question for my thoughts on it, because you might not have a specific system for this. But I would say no, I don't think this is valid, because only breaking that low means nothing. Because what if it's just a range? Okay, so what if you're just selling the loss of the range EQ? So this has to be, if you're going to enter a short here, this has to be managed in a way that is, it's going to be very, you have to be very careful with the management of the of this trade, because you're gonna take profit here, but you have that support. So you're basically shorting, hoping that this support will get lost, and then TP here. Most likely what you would have to do then is, or what I would have to do if I took this trade, was to see what price does here. When you do hit that level, I would need to move my stops to entry to really secure that position. Because what we might see here is price just, continuing to the upside, taking this momentum and just pushing it higher. But we do have news events coming up very shortly. I'm going to bring up my phone here. I'm a little bit limited. I only have two screens here on with my portable setup, so got to make sure I can get all the data here by opening Financial Juice on my phone and kind of using it as a third screen here while I look at. Sorry for that sound, by the way. I've moved my share and it doesn't sound very nice. So let's see here. This is not the setup I'm interested in. I'm interested in this setup right here. That's the setup that I'm interested in. So best case scenario here is we see a strong volatile. By the way, guys, how's my audio? I know I know I look great, but how do I sound? Because I got this microphone. I'm not really sure about the quality, so let me know how the sound is. Now, best case scenario is we got the news events pushing price higher initially, and then we get another push to the downside. That push to the downside, I want to be. I basically what I'm saying is I want news event to push price up, create a high, eventually come down, test that level. That's where I want to have my entry. All right. The third word is volume. Okay, volume as the bars at the bottom, the vertical bars at the bottom of the screen. Volume as in the way you measure liquid, I guess. Thank you, man. Thank you. And Kim, always here, Kim. Thank you. Logan Jones, thank you very much. I'm saying thank you like you're commenting on my voice, but you're just, I guess you're commenting on the actual microphone. Two minutes till put some music on. It's very, very. I don't get the volume control here because I have like obviously volume control zero, but I got it at 2. What happens if you put it on 100? Okay, we got 1 minute. 1 minute, guys. Less than 1 minute now. 15 seconds. Okay, so 10 seconds left till US initial jobless claims and US GDP quarter to quarter. Let the gods of volatility be with us. There we go. US GDP quarter to quarter, second estimate actual is 3.3%, forecast 3.1%, previous 3.0%, which means it is slightly higher than expected. It is higher. Obviously, the forecast was 3.1, so the figures was obviously that it was expected to rise, but it did rise slightly more than expected. I don't know if if 0.2% is a major increase, if it's something super major. But it usually shows in the volatility of price. So the level at which the numbers were overshot was is usually in the numbers. Okay, so we also got the initial U.S. initial jobless claims at 229,000, which is pretty much at the level of estimated. There we go. That's the hit of the level. Now, can we get a reaction down here? Looking at the 1 minute, it's a little bit too early. If you're on the high stakes account, you also can't trade during this time. But that is not this, ladies and gentlemen, is what I call a perfect retest. Okay, you see gold coming down. This is exactly what I said before the news event. You want to see that test of that level. It's an untested breakout level, and this is exactly what we're seeing right here in the 1 minute. News came out, catalyst for price to move lower, hit that level, instant reaction when that level was hit. Obviously, did we trade that? No, easier said than done. But look at that reaction, beautiful stuff, very good. Wish I made some money on that, but I didn't. That's depressive. I hope some of you did. And then also, like, the guy who asked me if he should short that, I'm like, that's a terrible short. That would have been a great short, man. Probably shouldn't take advice from me. Probably just follow your own ideas if you want to make money. Nice. Activated my sell stop and almost hit TP. Congratulations. That's what I'm saying. All right, welcome, Victor. Come in. Hello.
Hi there. How is everyone doing on this nice day? I've seen you've been talking about a very nice opportunity which you did not get to profit from. How do you deal with that? How do you make sure that doesn't affect your psychology going forward?
I try to study sociopaths a lot, and then I try to mimic their behavior. That's what I try to do.
All right, so that is your solution to.
That's the trading tip of the day. How to deal with emotions? Well, it's just don't have them. Just
study the criminal mind and apply it to the markets.
Just suppress everything until it feels good. It's never going to feel good, but if you suppress everything, it's not going to feel good. But I think it comes with experience, time and experience and age, and also having kids. I think It's like you stop caring,
You learn to let go, right? You can't
Yeah,
control
exactly.
everything. Exactly, especially with kids, right? You have to find that delicate
You
balance
gotta let
where
them go.
letting go, obviously not completely, but there are certain things you're not going to control. If you're going to control everything, you're not going to be a good parent.
Exactly. But like when it comes to kids, I think patience is definitely something that I've grown in the patience department. Like I'm able to deal with these things easier. Missing opportunities, having stop loss being hit, and all of that. It's easier with time and
I,
experience, I think.
I think that is the tip of the day. Do you want to be, a very good trader? Get kids.
No, absolutely not.
Have some
uh,
kids.
yeah,
Tell your significant other it's time to, enlarge the family.
yeah. No, I think. Well, like, yeah, definitely. Getting. You learn a lot with having kids, of course. A lot about yourself, and I think. But trading, if done right, if you explore, trading psychology in the right way, um, I think you're going to be able to learn a lot about yourself and figure these things out. But it takes time. It takes time. I mean, also, how much do you want it? How, or not want it, but like how much do you need it? How much do you need that money? Because the more you need the money, um, the worse of a trader you're going to be. And
That's the
we all need that money, but the bigger the urge to get that paycheck, the more desperate you become, and your emotions get exaggerated in those moments.
I think you're hitting things on their hats here, and by that I mean nails, um, because the you got to be hungry, right? You got to have a hunger in order to succeed in trading. Otherwise, you're not going to go through backtesting and putting hours and hundreds and sometimes not sometimes eventually thousands of hours into trading without having some clear evidence of what you're doing is going to produce something or not. So you got to have that hunger, but that same hunger, as you said, if not channeled the right way, will be your downfall, right? You cannot be greedy, and I've seen that the more successful I am, the better trader I become. Not because because of the fact that I'm in a different place, mentally. If you're waiting, you're expecting something from the market today or this week or even this month, because otherwise you cannot make ends meet. You're not going to be a good trader. You're going to be a horrible trader.
Yeah. Oh, definitely. Can you, Victor, just give me a minute, and I can perhaps add your screen, and
Yes,
I'm
I can.
sure. Okay, perfect.
How do you make comments go as fast as yours?
What?
No problem. We'll figure it out. Jonatan, that's fine.
Thanks.
Love you, my man. No worries. Take care of whatever you need to take care of. And we will be here. No problem. All right. So we are here. It is as I said, we had it is a beautiful day, right? Well, every day you could say is a beautiful day as long as you are every day you're alive is a good day, right? If you have that perspective, then I think nothing in your day can break that day. But that's a sort of top down an approach as well, right? Let's look at the market. The reason that I say hi there, hi, how are you doing? The reason that I say it's especially a good day today because we have a very beautiful quasi on the H4 that is also within a bullish order block, right? And it is currently, it did not trigger me in, Right, this is the second one. We already were in one, and today we might create another one, which gives us more confluence, more indication that the market is switching back to the bullish side. At least from this point, we have not one, but three actually order blocks by tomorrow, probably three, that is indicating that the market is getting ready to continue. And if it is getting ready, it is likely to be going to that next level, which is that entry order block on the quasi, a bearish one. Well, it is a bearish one, but it is, at least for our overnight, if you're in a trade or perhaps a little swing trade, this would be a very nice target to have. And I would definitely consider holding something for much longer, because this market is switching back to bullish, as we can see on the daily. As I said, three order blocks, well, two plus the one that we are expecting by tonight, by the end of the day, to indicate that the market has switched completely. And we didn't have, I had an issue with this quasi, right? The quasi we had previously, one with, this would be the head. I had an issue, and that's why I couldn't enter, right? That's just me. I mean, it doesn't have to be the same for everyone, right? We all trade differently. And to me, we had to have between this point and the one above here, we had to have a valid entry order block on the quasi. We did not. So that tells me that I wasn't able to get in unless we form some new structure. And we did. This was on Tuesday. However, we didn't get any alignment with lower time frame. In fact, it just was very, very weak and eventually broke it. And by that time, this became the new head, and this is the new head. And we currently have created a quasi, a new one, right? So the quasi is not something fixed, right? It's not something, it's something dynamic. At least in my perspective, it is dynamic, right? The market can break the head and create a new quasi, not all the time, but it does happen. And this is one of those times where, the head does not form the right perspective, and it's actually it is in the next one that is perhaps, we don't know that. Let's see. Thank you, Wesley. Thank you for your well, I don't know if I should thank you for agreeing with me or liking that perspective, but thank you for your support. So we have, this is the quasi, right? So this is, we do have reasons to go long from here. We had already, maybe you're already in a long, which makes a lot of sense. Price is pushing forward very, very convincingly. But to me, on the H4, the only reason I had was this order block, this fresh order block to get in. So this fresh order block to get in. And it did react to it very beautifully. I was looking for this to give me an entry, right? Even though it wasn't the whole quasi, right? That I wouldn't be trading the quasi. I would just be trading this fresh order block. And eventually, it didn't give me any entries, right? On the H2, as you can see, it created one, but only, afterwards, it never came back to that particular one. And in this candle, I was looking previously to see if we can get a quasi in an entry right there, and eventually that turned out to be expanded a little bit more to that order block. But none of them, if you go to the lower time frame, none of that gave me any entries, right? Any time the market on the execution time frame closes below the area would be the H1 in this case, right? So it would be the H4 plus the H1 overlap. So in between, and if you look at the 5 minute, this to me is something that I do not trade, right? So if it goes below and starts closing below that order block, this is the area. Let's look at that, right? So this is the area, and I do not, this is the area, right? If I want it to be, it can squeeze it. It can make wicks, but if it is going to start closing below, like it did right there, I don't want to touch it. It might still come back and reverse, like it is doing right now. But I know from what I've measured that that's not the greatest reactions that you can catch from from these areas. At least not in the way that I trade. But that would have been. You can still see that was a very great area, even if it was eventually squeezed by a lot. You can see that was actually, that area was very important to push price much higher. So that's a very good reaction. I'm pleased to see the market react the way it did, even though I wasn't able to catch it. So let me arrange things. All right, so head and shoulder. Yes, the quasi is a head and shoulder pattern. For those who are wondering, not everyone is familiar with a quasi, and it's because I wouldn't say it's unknown, but it's not as known as the head and shoulder. The head and shoulder is a pattern everyone knows, very symmetrical, where you have the bases of each shoulder and the tops of the shoulders are presumably very similar, and in between, of course, you have the head. And with a quasi, you don't have these symmetry, right? With the head and shoulder, you have symmetry in the heights of the shoulders and the bases of the shoulders. But with quasis, you don't have that. And quasi is not for quasi, right? Almost. But the other meaning, which is the abbreviation of the Quasimodo name, right? It's a name, actually. So this would be a quasi where you have it's not symmetrical. It's still a head and shoulder, just not the typical head and shoulder, right? You still have two shoulders on each side, or one on each side, and the head in between. And I find this to be a very, very effective way, and allows me to methodically approach the market and wait for my entries, and only take the entries that are completely aligned. In this case, for example, we do have a quasi, right? That's the quasi. It takes out the high, but it never came back in it may still happen, although with this momentum, I doubt it would actually happen still. Let's look at the Nelson asking here, you want to learn about quasi? I just explained that, especially about the rules of the quasi. Okay, I can talk about that for sure. I think, well, I could be biased. I could be just a little bit biased, but I think that the quasi pattern is, in my opinion, the best pattern. If you had to learn just one pattern, I would definitely say it's the quasi. And the reason is that the keyword of today, I'll have to ask Jonatan. Jonatan is in the background. He will respond to this. The reason why I believe the quasi is so powerful is because if you go ahead.
What's the question?
The keyword of today.
Oh, the keyword, that is well, it's out there. It's already been announced, so it's out there in the chat.
All three of them.
Yep, it's all out there. Yeah.
All right. Sorry to
I'll be back in a bit.
To summon you from the invisible world.
Yeah.
All right. So so we have here let's talk a little bit about the quasi, right? So I already explained the difference, what it is, the basic, right? It's a head and shoulder, it's a variant, but just not as symmetrical. In essence, what the head and shoulder is when you have one trend, right? In an established trend, to me, that's the definition of the quasi. An established trend gets broken, right? So how you define the trend is something that you can mold to your style. The exact rules you utilize. For example, but it needs to be the trend. right? So, and a trend is the basic definition of a trend is higher highs and higher lows. So whenever you have higher highs, higher low in that time frame, you could potentially have a, it could, if that trend were to be broken, it could turn out to be something as a quasi. So let's paint that again. So, however, what is important is when you start applying this, you start doubting, or you start seeing that it's actually very important to have clear rules. What is a swing high and what is a swing low in that trend, right? Because the price will not move in lines like this, right? It will have all kinds of little movement, and you gotta have a rule to understand, was this a quasi right here? Is this a neckline? Is that a neckline? Was this a head at some point? Yes or no? And the only way to do that is having very objective rules. And I'm not going to explain all of the rules because they're part of the actual strategy that I trade. But what I can say is the following. The simplest way to, if you go to any time frame, let's choose any pair here, and we can and analyze it based on that, right? So if I look at, for example, this area, imagine we didn't have, all right, it doesn't matter. If we have a, you take from present time, right? You go back, let's say from present time, you go back, and the highest point that you, the highest point that you find, that would be the way you start to look for the quasi, right? In this case, it is this swing high. And what I would do is obviously use top-down analysis, but work my way back from that point, assuming that it is a head. It may not be, but that's how you start. And you go back and see which point, right? From, I have, for example, in this one, I have multiple swings, right? Multiple highs that it created before the one that I just showed, right? And the question is, which one would be the left shoulder? And the rule that I have to indicate which one is, because the neckline is defined as the lowest point in between the left shoulder and the head. So if you think that this is right, so I'm gonna number them a few times, or not a few times, a few of them, actually all of them. Right. So if you think that, let me just check something here. All right. So if you think that that number one is the left shoulder, then your neckline would be here. And there's nothing wrong with that. And if you think obviously that it is number two, then your neckline would be here. And why is it number three? It would be here, right? The lowest point between the left shoulder and the head. And if you think it's number four, then it would be here. Okay. Now, why is this important? Why would you, right? So you start with the head, and then you go back to identify which is the left shoulder. And depending on the left shoulder, the lowest point, that's where you put your neckline. Why is this important? Well, the neckline is the trigger. If the neckline isn't broken, there is no quasi. So the rule, how you define the left shoulder, is the foundation or the definition of what a quasi is for you, right? So in my case, my rule would tell me in this case that this isn't the neckline, nor is this one, but this one is. Why is that? What I need to say, without actually giving out the exact formula, what I need to know is, I ask myself this question: did the left shoulder, did the sellers, as in this case, this is a bearish quasi, did the seller come into the market and over, did they take control? And if I ask myself that, number one would fall off, They didn't take control there. How about number 2? They didn't take control there. So and if I see number 3, yes, I can see this price action, and I can see this price action, right? And so that's a very objective way, without giving out the exact, rules, just answering the question, when was the last time in a bearish quadrant, when was the last time that the sellers took control before the head, right? And that lowest point where they failed to continue down, right? They failed at that moment. That's the line. That's where the neckline goes, because once it's broken, it tells us that something has actually changed structurally in the market. So to make it simple, this may be not as simple for everyone, but let's make it so. Basically, right? So the steps are the following, right? One is you identify the head. That's usually the highest point. If you're looking for a bearish quasi, the highest point in that point and in that chart, on that side of the chart, or the lowest point if you're looking for a bullish one. Then you go back and you identify possible left shoulders, and you apply what I just said, where you're looking for where was the last time that the sellers took control. Was it this one? Was it that one? Was it that one? And once you have decided which one it is, and by that you need to have an objective rule, you put your neckline there, and you wait for price to break it. And once it's broken, then this is how I trade it. You don't have to trade exactly the way I trade it. I take the lowest point after the break and the head, and I wait for price to come back above 50% at least, right? You could do it with less, but I've checked this, and with everything else, all the parameters in my strategy, I need to be doing it above 50%. And that's the area that I want to be looking for, right? If it doesn't reach it, then I'm not interested. Now I go a step further, and I identify, because this area can be quite large, I identify the area, and obviously it's not with certainty, but is there 1 or 2 areas which I think that's the area it needs to get before actually reversing. And once I identify that, and that's the entry order block on the quasi, as I say always, that is the area that I would be then going to the lower time frames and getting my tight entries on the 1 minute, on the 5 minute, and so on, and trying to catch that move all the way to the end of the structure, right? And whether you put your stop above the area, or you have it perhaps with some fixed number, away, like 15 or 10 pips, right? That, which is also okay. Or you put it above the whole structure. That's up to you, right? Those are choices you have to make and find out what is the what's optimal, what's best for you, and the way you trade. And it will affect your win rate, your risk reward ratio, and that depends on what kind of person you are and how risk averse you are in that respect. But that's the basic idea of how I trade the quasi. And this, having a structural way to approach the market, is much important than the actual structure, the actual trade plan that you're using. I'll say this again. It does not really matter the exact trade plan that you have. Obviously it needs to be profitable, but what's more important is that you actually have a plan that you respect, that you have tested, and that you know when to act and when not to act. Very makes the whole difference. You can have a very simple and not so profitable plan, right? Trade plan, but if you have everything in place and you execute that flawlessly, you can still be very, very successful, right? And you can have a highly profitable strategy, but if you're not able to stick to it, do it structurally, methodically, precise as the plan is, you might not be even profitable, even while having a profitable system. So it's very, very important, not so much to have the exact, structure or a trade plan as everyone else. Actually, I think it's important to have, a process that you build, because that's, there's nothing better than build it yourself. You know all the whys and how to, how the rules originated, and you can modify them in the future if need be. All right, let's check the chat. Don't forget, if you are watching us and you think this is helpful, let us know. Let us know in the chat by engaging us, and hit the like button and subscribe to the channel. All right, let's look. Someone in the chat saying the keywords. I'm not gonna confirm or deny that those are the words. All right, let's check. Someone asking here or saying, I'm a profitable trader, but trading disturbs my mindset every day. That's an interesting comment. Trade venture. What do you mean by that? You mean that trading, disturbs other aspects of your life? Like when you're trading, or the days that you trade, you're not able to do other things as well? I don't know. Let us know what you mean by that. Okay, let's take a look at perhaps gold. Let's go back to some other pairs. Sage has a great reversal pattern. Yes, it is. It is. I think totally. I know. I know that the quasi, when you approach it correctly, when you apply it correctly, you don't need a lot of more things added. It is enough to be profitable, and if you refine that, you can be, nicely profitable trading the quasi. Let's see. Thank you, no problem. GU Manish is saying, how you doing, Manish? Good friend of ours. Manish is in the house today. All right, so let's look at GU. Let's see what we have here on GU on the higher time frames. I'm going to go very, very quickly to it. That's an idea we have. Or maybe I should leave it, right? Let me just leave it. All right, so we do have a bearish and a bullish quasi fresh order block, which is the one that we're dealing with, is the bearish one. On the weekly time frame, we are currently in a weekly bearish quasi as well. So you could look for alignment on the daily and the H4 to check a possible H4 entry, or entry that you can expand all the way to the weekly and the monthly. However, you do have to check for where the momentum is, where the order flow is coming from, and that is, in this case, is we are here at the, if you look at this from, as we are retesting this order block, this monthly order block, what we can see is that the market is not at all reacting bearishly to this order block, to this bearish structure. It was created before by selling pressure, but apparently, by the looks of it, it is not behaving as that selling pressure is still there, right? And that's what we need to be trading. We need to be trading what's in the present, right? Of course, we need to look at what's to the left, what has happened so far. But if the market, right, this is what happened before, right? That's the bearish weekly. But if the present is not aligned with that, there's no point in using something from the past to force it on to the present, right? You only trade it when both of them are telling you the same thing. So we do have what we're actually seeing is, if we could go a little bit deeper, what we're actually seeing is bullishness coming back to the market, right? And the reason is, of course, the fresh order block on the left. Actually, not fresh. That's the reason price made that reaction, beautiful reaction. And then we created a new one. right? And what is price doing afterwards? It had continuation, and these wicks are telling us that the market is basically using that upper border of that weekly as jumping ground, or area for it to continue higher. That's likely what it wants to, not that is what it wants to do, and likely what it's going to be doing. Thank you for asking, Manish. Great to hear that you're doing well. All right, so we do have, look at this, the wicks. The wicks, they tell us that the market is actually holding up and reacting as we would expect from the weekly order block. And on the daily, all right, let's check this. On the daily, what do we see? We have a quasi, yes. In this case, it was very simple to identify the quasi because there's only one way, one place that the buyers came in, which is this then becomes the left shoulder, right? And it was activated, and price does come back to react to an order block, which is this one. However, right, this is the order block. See how price comes back and reacts from it? However, this one is not beyond the 50% retracement. So personally, I wouldn't trade. Doesn't mean you cannot trade it, just that I just decide to let those go, right? What we don't have is at that place where it reacted to that order block, we have another fresh order block being created. Price comes back to it, and that was yesterday. And if we look at it, let me eliminate this. Right on the H4. Yes, David. The 3 words have already been mentioned. The 3 secret words. Let's see. So what we see here is the market coming back, and this was yesterday, very beautiful, but it failed. It failed to get to the place where I would be entering. As you can see, it's quite selective the times that I do get to trade, right? Because it has to do exactly what I want for me to get in. And it didn't reach that area, so I didn't. I did create a fresh order block, but it didn't come back to retest it, at least not on the H4. And maybe it will still do this, right? And that's when I come into the market. Being very selective, and that means that a lot of the time I will miss the entry. The move will go without me, and I have learned to live with that. That's part of that's the price, that's the trade-off. If I want to be a high risk reward ratio, I need to be very, very selective. Not going to be trading everything. I'm going to be trading only those that are aligned in all the ways that it needs to be aligned according to me. So this doesn't mean that you couldn't have traded it. Anyone could have traded, even using the quasis. And if you understand what price is doing, and if you know in advance that the market is gonna come down and probably have this reaction, doesn't matter what method you use, what strategy, your entry model, doesn't matter. If you know what is likely to happen, and the quasi gives you this a lot of the times, it knows you, it can give you what is likely to, what kind of reaction you're likely to have, the market is likely to have, and that's edge right there. Just build your system around it, and you can use it. So on GU, that's the H4. Let's take a look. Right here. I don't have anything to be trading from these levels, as in not on the H4, not on any of these time frame actually. So this is not a quasi for me, and that means that I'm not interested in going short here based on this area. There is an H4 here, but that is based on a bigger quasi. Let's take a look at that. All right, so that is, in this case, that is there is a bearish one, yes, right? So the neckline would be here, and as we can see, it did trigger. And that's right here. That's the quasi on H4 quasi. All right, so we have the neckline. It gets broken and it comes back, and in this line, right, in this leg, from here to here, that's the head, and this is the neckline. It breaks it, so the quasi is as following, right? There's an established uptrend, right? That's the quasi. Neckline is not here, but here, and it breaks that neckline right here, and then you go back, you reverse from the break where it impulsed here, you go back above the 50% and you look for those entry order blocks. And we have one here, right here, and we have that's it. I don't think there is anything else. Let me check. No, actually there is one right here. There is another one right here as well. Okay, so you have 3 entry order blocks, and that's where you want to be waiting for price to come back to. And this is one of them, and it has reached it already. Let's go to the lower time frame if we have reasons to take it on the H2, and that is, do we have reasons? I don't think so. Let's check. This is 1, 2. This is interesting. Let me check this further. On the H2, we do have just 1, 2, 3, 4. So there's nothing there, and there's probably nothing going to be on the H2. So we don't have a reason to get in right here. At least I don't. 1, 2. No, we don't have it. All right. So that means that we do have a bearish order block here on the quasi, a bigger quasi, a bearish one. And this is the area. And I talked about this. I remember, I think, wasn't it yesterday, for those who were in the Discord community? Wasn't it yesterday I talked about this scalping strategy? Who was there? Let me know in the chat if you were. It was after the actual session. I remembered. I promised that I would share a very simple strategy, I closed the Discord already, but I came back. It was sort of like a post-credit scene, and I then explained the strategy. But this is exactly it. You can see how on a higher time frame you have a structure. In this case, an H4, part of a quasi. So very important, and you can see, you can actually, scalp these, and this is much more than a scalp, obviously. But right there, that's a very beautiful example of how you can, when price gets to this level, you can trade them. You can scalp them, right? Let's take a look at, this was today. Let's take a look at it. I didn't trade it, to be fair. But you can definitely trade them, right? You can see, you take the lowest, the last bullish order block. Once it gets broken, right, or the first bearish one, whichever it appears, they're basically the same. So here you have this is on the 1 minute. That's the last, after it touches that order block, the last order block it creates is this one. It's not an entry, just a regular 1 minute order block. And then once it breaks it, right, you can either take the trade there or wait for it to retest and then move away, right? Whichever, that's up to you. So you take it as it is breaking down, you put your stop above, and you go for, whatever whatever you feel comfortable with, either 1 to 1 or whatever it is that you have tested and deemed to be profitable, or you wait for the market to actually retest it, and then you can be a little bit more precise because you have an actual area that it shouldn't take out. As you can see, only a couple of pips, and this is high probability trade. I take them all the time, using higher time frame order blocks and mixing it with very, very to the extreme, basically, right? So from a day trade, H4 is quite large, but using it with all the way with 1 minute, for example. All right, Marina, I think I missed that. Sorry for that, Marina. But we will be. I'm happy to share that anytime again and go in more details. Just now I just explained, give an overview of it, but it can we can go over it again some time in the future. All right, so we do have a reason here to take a short. If I were to take this, I would need something to confirm me on the H1 that there's a reason. I don't see that yet, right? So the H1 and H2 does not align yet with the H4. So I will have to wait either for price to get back and then give me the reason, or it's not going to happen and it's going to continue to break eventually. We don't know that, but that's how I would. I wouldn't even go to the 1 minute and the 5 minutes right here, because I only have the H4 and that's not enough to me. I need to really have alignment in order to get in. So I'm waiting for this order block to be retested and have alignment with some hourly H1, H2 time frame. No problem, Marina. No problem at all. All right. Let's see. Ashish is asking us, clear sometimes market reacts to the order block early where it is, as it is, takes high or low hitting too much wick. What's your finding on this? Ashish, what I can say is the following. It's not about the order block. When the market is opening and closing, order blocks is just an expression of price action. There's nothing special about them in this. They're just price action. It's just the intention. It's footsteps, basically, the tracks that the market leaves behind as it is doing its thing. It's moving around. So what you want to be doing with, in terms of understand, is that, as the market starts, you have a very natural tendency of market to expand in terms of volatility between the sessions, right? So you have, if you were to measure the ranges, okay, so this is not price, this is the ranges, right? The size of the candles and the ranges it has on the lower time frame, you will notice that it will do something like this. As the market starts, after rollover, it will go up. Obviously, it will start ranging, but that will be Asian markets, and it will not typically. I'm talking about averages here. The ranges will not be the highest of the day. Comes London, and you will have a spike, right, in the size of the ranges, and then before the London start, before New York starts, there's typically a little dip in the volatility in the ranges, and then you have another peak, which is New York overlapping London, and then eventually that comes down again to the rest of this holds up a little longer actually, and then falls down to before rollover, right? That's the common. You got to grasp this before you think about and use this to approach the time of the day. So what you want to be doing is, in this area, when the market is not expanding in ranges, that's the best time for the market to respect these order blocks, right? And when it is expanding, right? So at the beginning of London, and the beginning of New York, that's when the market is, breaking out of its, previous levels. Not all the time. Sometimes it uses to go the other way, but those are the moments you will have breakouts, right? So you need to build this in, or have this as knowledge as you approach the market and you're trying to use these order blocks, because the at the beginning of these, at the surges of the volatility, at the opening of the New York and the London, that's the time where fresh volume is coming in, and the previous ones may or may not be respected. Okay, so the best time is to wait after the open. Then you already have that surge, and what will happen is that you will have an area where it's been established what the market wants to do based on the degree it respected the previous structures, or perhaps the newly created structures during that open. and then that's the best way to catch the move, right? So after the open, when it's already giving you enough data to tell you, okay, this is what it wants to do, these are the structures it created, but not using structure, for example, on the open from Asia. It may react to them, but those are not great order blocks because they can come from a lower volatility period, right? So you want to understand that. You want to be using, be aware that after the news, not the news, but after the open, that's when you want to be looking for the newly created one and how it reacted to the other ones, right? Because if a structure is strong, it's going to hold, and it can hold a London open. That's confirmation, and that's the structure you want to be trading from. And we have you're muted.
Well, okay, not thank you. Hey guys.
No problem.
How's it going?
Great. Market is not giving me any signals, but
It's slow today.
Yeah, kind of slow today, but it's moving likely. Very nicely. If you're already in the trade, I was looking for EU to get. Let me see where it was. I was looking to go long at this area, and that move we just had was very beautiful. If we would have, that did trigger. It didn't trigger me, but if it were to have triggered someone, then that would have been a very nice move. And this is what I mean. That's a very nice move to catch, right? So the market is kind of slow right now, but that's doesn't mean to say it didn't give us enough opportunity today.
No, we did get some volatility today. We definitely did. It's just not the best time of the day for that. I have a giveaway to announce. This is the winner of yesterday's giveaway. So we're gonna do a little draw of that one, and the secret words of the day has already been announced. We're gonna do a little giveaway here for yesterday's giveaway. So let's see if we can get that drum snare going. All right.
Wow, what a timing.
Samir. Hopefully that's not, hopefully, but maybe that's our Samir. Let's see. But Samir, you have won let's see. Okay, I got it. I'm not sure exactly what you want, if I'm honest. It's either a high stakes account or a boot camp account.
You want something.
You want something. It's going to be a surprise. You've signed up with an email, and you're going to get an email to that email with your giveaway prize. All right. Victor, I'm gonna have to dip off again, unfortunately.
No problem.
But of course, I'm gonna be here in the background. If you guys need anything, I'll be working on some other things here in the meantime.
No problem, Jonatan. Keep busy, keep productive. If that's the good example we want to give to our traders, our viewers.
Yeah. All right.
You gotta be working on your edge all the time. Thank you, Jonatan.
That's it. All right. Take care, guys.
Bye-bye.
Bye.
All right. So yes, thank you for those. You're too kind, Nelson. Too kind. All right. So congratulations to Samir. Hopefully it is, whoever it is, congratulations. We are rooting for you. We're rooting for all Samirs out there. Actually, we're rooting for everyone. We want you to be profitable. That's why we have these streams. Think about it. That's the reason we have these streams, because we want to. That's why we're actively looking for other successful traders, profitable. Even if you're starting you're relatively new to the market, you're still growing. But if you are profitable, you're getting payouts from us. We are interested in expanding our team, with real traders who can. And the requirement is, as long as you can. You have knowledge to share, to give to our audience, and you're already getting those payouts, those so coveted payouts, then we want you to be part of our team. Awesome. Indeed, Chipeta. Indeed. All right, so let's take a look at gold. Who's been trading gold so far? All right, let's take a look. And gold on the higher time frames, obviously it is retesting that monthly with not flinching at all, and still holding that weekly uptrend of higher lows, defined by those higher lows. And it is with very little, you see, it is retesting. This is basically, to me, the last line or structure in sand, right, where it should not close on the weekly above that, right? There's nothing else stopping gold. Once it breaks this, to me, it's getting ready to go higher. It doesn't matter if it comes back lower, but if it breaks this weekly, to me, it opens the door for much, much higher prices. But we'll still have to see. So we have the awesome Mantas. Is that with gold? Was that with gold? You had some profits? Let us know in the chat. We want to celebrate with you. Share all the goods, share all the secrets. No, I mean all the whatever you want to share, whatever you're comfortable with, but do share it with us if you don't mind. All right, so we have an H. Let's see, on gold, we are getting in a very interesting place, right? There is a bearish. There are bearish structures here, multiple ones actually. There is the biggest, which is this one, and we have a smaller one, which is also a quasi in its own right, but it's not the biggest quasi or entry order block on that quasi. So I'll just make it a little bit smaller, and then you have an entry, right? An entry which is an inferior entry for your shorts, but it does not seem to be wanting to. To stop there, right? If price is not confirming, we should not be forcing our opinions or our projections on the market, because that's not how it works. Perfect. Lovely to hear that, Mantas. Thank you for sharing that. And Peter said he made $130 gold on a 2,300 account. Amazing indeed. That's what is that? That is more than 5%, right? That is yes, that's about 6% almost, 5-something% on your account on one day. That's amazing. That's really that's super good. I would say, I don't know how you trade, but make sure you are risking safely, because that's a very outsized win right there for a single day. All right, so we have this area. That's the daily, which is with bearish structure within the weekly. So I want to be waiting and see if price is reacting to them. And so far, it's not really reacting to that order block. We do have an H4 as well. So I would be interested in going short from here. But the market is not, as you can see, the market needs to create and break those quasis. And it's not break them, but I mean create them and come back and react from them, start create the structures it held behind. Let me mark this a little bit here. So we do have a bullish here. That could be the line, the indicator, or the canary in the mine, coal mine, telling us as long as this is holding, there's no reason for us to take a short from here. But that could be one reason for us to actually on the H4, do we have something? We don't have anything here. It's breaking bearish structure, so I wouldn't be, there's nothing here telling us that it wants to break out, right? There is a outside bar right there that's actually visible on the H2, so it's actually a little bit more powerful. So this is still bullish completely. So if the lower time frame do not shift into bearish, the higher time frames eventually cannot do that on their own, right? The lower time frame, if there is a reversal, it will start always from the lower time frames, and they will start building it until it's visible on the higher time frames as well. So your best indicator is to shift a little bit lower, right, to find out if there's a reversal in progress. And here there is no reversal in progress, right? The neckline on the H2, for example, is right here. And remember, we talked about the quasi at the beginning of the stream. It is also there for the H4. There's nothing here indicating that the market wants to reverse from these levels from the H1 as well. So this is the level. As long as, in terms of quasi, if this doesn't change, doesn't get taken out, then there's nothing for us to be trading here. And in the case of a early sign would be that bullish order block here. Before that, there's nothing to do. There's no reason for us to be taking a short here, even though it is in a H4 entry order block, and even though it is on on the daily and the weekly, there are structures here that you could be trading. They are within the daily order block, so there's plenty of alignment, but the time frame, the alignment isn't connected on the lower time frame. It's the price action market structure is not breaking down, reversing, not even a little bit. I'm gonna check one thing though: how are we doing in terms of the range of today? So this is 24, and the ATR is at 40, actually 37. Yeah, 37. So basically, that's about 2/3 of its way to the market. So it still has plenty of room to run if it decides to do so. And it looks, by the looks of it, it does look like it wants to have another run upwards. And let's see if there is something we can do here. Let's see on the 5-minute. This is quite bullish. Price is reacting on that H1 order block. That's the order block right here. This is the order block. It creates, it comes back very beautifully to take that reaction. I wouldn't trade just an H1, but I mean, you could, and if you were to do that, I would definitely be doing it this way. Let's see if I can indicate how that would work. Right, that's the quasi. This is the established downtrend. See that? Established downtrend break, and then comes back. And let's see, there's plenty of structures there. Let's see how many are there. There's actually just one big one, and that's where the market comes, and that's where you could be waiting for price to reach and move away with, right? So that would be the way I trade such a place, right? Somewhere in there on the lower time frame, you put your stop beyond the structure and a little bit lower, just for liquidity, and you target that high. I didn't trade this, but that would be one. That would be the general idea of what I would do in a situation like that. And even if it didn't trigger here. Let's see, it didn't trigger there either. Neither there. Okay, so there was a little chance you could have taken it here, right, as the market was retesting that order block right there as a fresh order block. That's a nice entry. All right. Okay. Thank you. No problem. Any pairs you guys want to be looking at today? We still have about 20 minutes and some more for our stream, and I'm happy to go through any pairs you guys want to look at. Don't forget, hit the like button. I know it's it's easier to just stay passive and observe, but now it's the time to take some action. In your life, starting with hitting that like button and showing your support for the channel and making it possible for us to keep on growing, getting more team members, getting more content that suits, that helps you to grow as a trader, right? That's the idea. and that's what we're constantly here trying to do for you. Who here has traded this pair? Anyone in here traded this pair? I know that's a place where I got my last entry. Who here has traded that pair? This is Chrono from crypto.com, the native coin. Anyone? Let me know in the chat. This has been a rocket from some time now, and has it's been amazing ride so far. Let's take a look at the, it's broken all these levels and going to perhaps the all-time high was at 91 cents. I didn't expect it to be this fast, but oh my, this has been an amazing area. Amazing pair to be trading or holding if you're holding. Let's look at Euro Aussie. Check out NAS, someone says. All right, so let's take a look at NAS. All right, so we have on the higher time frame, it's very bullish. Nothing here to trade. We are getting into a bearish new structure that was created, which is somewhat of a, can be somewhat of a supply, right? A new one, a lot of stuff being created close to each other. So that's something to watch out a little bit. And we are getting close to it. But however, right, there is on the lower time frame, there is no alignment, right? The market has done basically this, right? This is basically the market structure it has done so far. Nothing bearish about that, right? So if you see this, right, market structure is not confirming, in this case, a weekly order block in the opposite direction, right? Not in the opposite, but I mean also not confirming, not aligning with that order block, then it's unlikely that this area is, at least it will have an effect, right? But it's not going to be the order block to be trading, right? You want to have multiple time frames telling you the same story, meaning perhaps on the daily have a quasi or some order blocks that were respected before. None of that happened. Not that area in any case. Very bullish still. Let's see if we can find something here. Obviously, the neckline would be here. And currently, I would want to be, it's quite clearly that, market structure is quite bullish right there. Let's see if I can find, if this is that's one. That is number two. And here. Other than that, there isn't anything else. So these are the areas that I would want to watch price. If I'm not trading them short, I will at least use them as targets, because these are areas that the price is likely to have, that the sellers are likely to come back to retest or to defend in the future, right? One of these three, or maybe all of them. Let's see. Yeah, that's the same level, right? So that's it. To me, the market is, on its way to just the next station, which it already almost reached, but that would be what it wants to, quote unquote, that's the intention of the market. Other than that, I don't see a lot here to do. What I would be looking for is, once we have let's say on the daily, let's look at the daily, what we have. We had a bullish order block. Okay, so I understand, right? So this is where this already happened. So you need to use this before it happens, obviously. But once we had this on Tuesday, right, at the end of Tuesday, so yesterday, you had a bullish order block here, right? And after an earlier one, which is coming out from a weekly below us, right? So there's higher time frame alignment right there. And once you have the order flow, 2 order blocks created in the same direction, even if they don't mitigate and don't overlap each other, the fact that you do have the same, you have that sequence, that order flow, you can start looking for a sell the next day. I mean, a retest of the same structure, so a buy that would be. And if you go to the H4, you would be then interested on Wednesday to go long, right? This is the candle on Tuesday that created the order block. So Wednesday would be so yesterday, that's where you need to be looking for that long. And that came, and let's see if you have actually you do have a quasi. And actually a very beautiful quasi. Beautiful. Look at this. This is the H4. That's the quasi. There. Lower lows, lower high. Neckline. It breaks it. And guess where it continues? Guess where? Right? Let's take a look at where it bounced off. From this point. Right? From this point, I'm not sure which one. I think it reached this point before. This was the high of the quasi. Where did it, right? If you go back, you use the 50% retracement tools. You're looking for structures in here. Anything. There isn't a engulfing, but there is an outside bar right there. Boom. Bingo. That's the point where the market reverses from. Not coincidence. It happens not all the time, but very, very often. It will use these structures, these order blocks that are still valid. And this would be an H4. If we go to the H2, you can, there wasn't a refinement on that. It was even visible on the H1 as well. So you would be looking to go long from this structure. And if you go to the lower time frames, it might be just a wick on a news. That was perhaps the at the end of the, that was the market close. But that's the area you want to be going long from, right? And as soon as that was the market reacted, you could be looking for the, let's see, it was a bit difficult to trade. I agree with this, huge candle. You have to go to lower time frames to catch a move from it. But the point is, that is the structure you want to be trading from, right? In this case, I personally, it wouldn't have triggered me. But maybe someone else. Let's check any other. Let's check. There is one giveaway per day. And yes, one per day. Let's check at. There was another pair you guys wanted. What is the Euro Aussie? Let's take a look at that. Euro Aussie. Try to do a little quick analysis. Quick still means a couple of minutes for me at least. But let's take a look. All right. All right, so from the higher time frames, we understand that we are in a huge area, reversal pattern, bearish one. The market currently is not showing any signs of reversal, so you don't want to reverse that just yet. On the weekly time frame, we have nothing. I can see it from a mile away. There's nothing to the left, so there's no reason, there's no alignment on the weekly. But then we can go to lower time frames. And this weekly, we were retesting a bearish order block, right? So you could have been waiting for that reversal or that reaction in any case. And we are currently back into demand area, right? So market moves from one side to the other constantly, right? Interchanging in between order flows. Sometimes it stays on one side more than the other, then you have a trend. But if it changes, it keeps on switching from one side to the other, you will get a ranging market, right? Okay, so you have the I understand that this is the order block. That's the structure that it was reacting from, and we're now currently, the whole structure, the whole market structure is quite bullish, and it's getting back to a demand area. So I want to be watching. I want to be watching for market to reverse back, if we can, to catch the continuation, right? If it's gonna come. So let's look for reasons to look for a long from this area, and there is a beautiful here, right? That's the quasi, and then we target the 50% fib, and actually you have one big area here where the market has a good chance of reversing from, and that's something we are currently in. So this is something you could pay attention to. This is let me see that this is not an H4 but a daily. Okay, daily entry order block, right? The quasi being this one, and aligning that with the weekly, right? Daily within the weekly order block bullish. We expect this move, and because of the quasi, we can actually target the whole area. So this is a nice one. Let's go to the H4, and I marked it without it being the case yet. Is this a valid H4? Actually, it is. It is. So this is an area I want to be trading. And actually, it's almost as wide as the daily. So it's not very helpful by being that wide, but we can definitely use it for our setup. Right? So using top-down analysis and the fractal nature of the market, we can keep using the same tools, the same idea, quasis and order blocks to find our way through the market. All right, so that is the Euro Aussie. We have is it still, can we point out some entries on this pair? We got 1, 2, and that's it. All right, so we do have an area here, very beautiful one. Doesn't always use the areas all the time. Sometimes it just reverses before by creating new structure. So, but these are the ones that you want to be paying attention to. All right, so there isn't anything here. Yes, there is 1, 2. Let me look at this, in a proper manner, because following the rules is all that matters when you have a rule-based system. And that's exactly what I'm doing. All right, so that's the H1, and we have from here nothing. Yeah, there's nothing in here. All right, so there isn't anything on the H1. So that leaves us with only, so far, on some big area on the daily, a quasi on the H4, this one here, and an H2. So basically, whenever you whenever you see that the market has switched back, the open is 79 and the close is 79 as well. So basically in here, we are already seeing that the market is reversing, or at least that buyers are coming in, and actually they already came in here. So that's a beautiful trade right here. Not on the daily, not on the H4. I'm sorry. I stand corrected. So you have that was an H2 reversal. But on the H4, there isn't anything yet. You do have a possible left shoulder being created. So what we still need, if this is going to use a quasi, we need a lower swing than this. and a break of the neckline, and then I'm interested in going long based on that structure of the H4. However, personally, I would be trading this as well. Right, that's a nice area that I'm not trading this pair. On my on the H1 there isn't anything. Yeah, so I would be able to go long, low time frame and get an entry based on this. So what I would be looking for, I would start here. Once it creates the H2 order block, consider this to be the head. Going back, right? That means that this would be the neckline, right? There we go. And that gives us, after the break, let's see if it gives us any entries. That's on the 5 minute. Didn't give us anything here. Let's see on this area right here. There we go. Look at that. Beautiful. Beautiful. Look at that. Now you put your stop either below that structure, below the next one, below the whole pattern, and you go long as it comes back for that entry order block. Beautiful. Could be I hope QA. I hope question and answer. I hope you well, actually, I don't know. Maybe you have a complete different way of approaching the market, and you're not looking at quasis and entry and anything like that. But that would be where I get my my structures. I'll have, a couple of pips, whatever, and then target. In my case, I would be targeting. There isn't really a lot to target, so that leaves me with this. I would target that, something like that. Basically, that would be the trade. Beautiful. It would be something like a 5R, depending on your stop. Could be a 2R, or could be even an 8R, depending on how tight you put your stop right there. Beautiful, beautiful QA. Thank you for letting us see this opportunity, although you may have told us before it actually triggered. But, by the time you said it, let's see when that this was. When did QA tell us? QA told us 18 minutes ago. Okay, so present time. Let's measure when this person 18 minutes was right here. I would want to bet that you did see the same setup. It triggered, and that's why you wanted us to look for that. Let me know, QA. I'm curious now. Now you made me curious. You're a cat. So do we have enough time? I don't think we have enough time. We have about 7 minutes, so we have to be selective with the next couple of seconds, because otherwise I will go way over time, and we want to keep within the lines. Let's see. You're a cat. We have pound kiwi as well. All right. Okay, so let's do your cat. That was the next one, but I'll just do it very, lower time frame without looking too long. Lower cat, not Euro cat. Euro Aussie, I mean Euro cat. Let's take a look. Used to trade this a lot. All right, so we have a couple of messages there. All right, so the monthly. Okay, I understand we are creating bullish structures, and we are menacing the highs. Other than that, there isn't anything else. We are still bullish from this level. Didn't hold quite nicely, but it did work in the end. So that is the, initially it wasn't a strong order block, but it did hold. And that's it on the daily time frame. We have a beautiful quasi. Can you guys see that? Is it? It's not a quasi. Not a quasi. right? This is not a quasi. Can someone tell me why this isn't a quasi? Why isn't this a quasi? Can someone tell us? Brian, Brianna, telling us a TP EURCAD 1 to 4. Beautiful, beautiful, beautiful. Why isn't this a quasi? Can anyone tell me? Because there is no downtrend here. Look at that. That's a higher swing, right? Higher than this one, right? That's not a trend. No shoulder, exactly. There's no shoulder. Very good. You guys are paying attention. If I move this around, you will see that this is not supposed to be like that, right? It's supposed to be let me move this and we can talk about it, right? So it needs to be lower, right? This is the movement. Let me start it again. So I'm going to retrace it, right? That's the move. That's this shoulder, right? That is that shoulder. And this point should never be higher than that, right? So it should be below for a continuation, right? This is a downtrend, and this isn't, as this point is higher, right? It may look very similar, but completely not valid. Okay, so that's the daily. By the way, the daily has already switched back into bearish order flow. Right there. Whoops. All right. And we are creating bearish structures and presumably going to the next daily in the opposite direction. So that's the target, right? So the market is targeting leaving one, going to the next one. Very, very simple. All right, so we don't have that. That's the daily, but the move already happened basically. So now I would be, I don't have a reason to go long here, although this looks nice as a reversal, to be fair, but I don't have a reason to go long right here. The daily is not supportive of a long. The H4, yes, there is an area here that I would be longing, wanting to go long from, but it's a weak one, to be fair. It's a weak one. Yeah, it's a weak one. It's not a great structure. So it's an internal quasi, and you want to have those external quasi, right? Accounting for the whole range and not just for a little piece of the reversal, but it can still work out. Let's see, the daily, the H2, is there a reason? We haven't gotten to it yet. Yeah, I don't know. I wouldn't do anything with this. Maybe intraday I could go long from here when it gets back, but only intraday, right? But that hasn't happened, and that's it. I don't have anything else. Yeah, I don't have anything else. So I would go long from here intraday on a little trade, right? Just to the next level, 1 to 2, 1 to 3. But I really want to go long from here, and I would be going, potentially taking this all the way to the next level again with a much higher risk reward ratio if and when it gets there. All right, that's EURCAD. Thank you, Brianna, for your suggestion. QA says, I had the same setup for Euro Aussie as you have explained. Oh, Nick, I thought you were talking about me. Oh, you are. Oh, you are. Thanks for doing a detailed top-down analysis and confirming my thought process. Appreciate it. No problem. No problem. That's exactly the idea, right? This is not meant as a signal to anyone. I'm not, proponent of signals, because I want you guys to learn and to grow as traders, because I've been in your place. I know how hard it is, and how you can feel lost in, among all the information, all the strategies, and everyone seemingly winning, thousands, hundreds, and even millions, and you're still wondering how to, pass your challenges. And I truly think that if you put yourself in the right environment, be part of the right community, be exposed to actual traders who can teach you things, even if they're not super traders. Does not matter. If they can teach you one or two things, that's all you need. You have a couple of those in your environment, people who are positive, who are willing and generous with their knowledge and experience, then that's a combination, a winning combination. I think you need to, as they say, tell me your friends and I'll tell you who you are. Well, in this case, I would say, well, tell me what kind of traders you are surrounding yourself with, and I'll tell you what your chances of being profitable are. Right? So that's the idea of this live stream. It is by being part of people who are getting payouts, right? The people who come to our streams are for a reason, right? They're not random traders. They're traders who are profitable, who have shown profitability. They have shown that they are able to get those payouts, and they have some different levels of growth, obviously, but they are profitable traders, and they have some knowledge to share with you. And that's why we want to have them here, and that's why I would like to ask you to hit the like button, give us some love, give us some love, and make this plan, this project, this generous, actually very generous idea of the 5ers to help the community. Actually, that was the plan all along from the 5ers, right? The 5ers is by traders for traders. It is actually the founder. If you don't know about the history of the 5ers, the founder Gil is a trader. He started as a trader, and wanting to do something with the community, and that's how the 5ers started. Then that's the best, the best kind of people and the best kind of organizations and prop firm you want to be part of. The ones that are, from actual traders, and that spirit we still keep in our streams, and that you're going to see a lot of things we're going to be doing in the future, because we have you in mind, right? We want to be working with our interest aligned always. All right, so that's the stream for today. I hope you guys are having a great time. Thank you all for your great words. I mean, Nelson says, yes, we are looking for understanding the big picture. Exactly. I'm looking for the big picture as well, right? That's the idea, in trading. You have to, not micro focus all too much on, one specific thing, to get the whole picture, and, direct yourself by making these decisions, what kind of exposure, what kind of social media you consume, can have an effect, right? All these seemingly minor decisions that you take on a day can have a big influence in the kind of trader you are forming. Just like a child that is growing up, right? You want to give that child good influence, right? Good friends, good examples. Why? Because then that child will grow to become a well-formed, well-balanced human being. Same thing as a trader. You want to be a well-balanced, good, responsible trader, profitable in your career. You got to make sure that you are given the right influence, be among the right traders, have the right examples, and so on. All right, I start talking about this because, of course, we are passionate about you. All right, so thank you all for joining us on our stream today. I hope you had a great time. I did. And I would want to invite you to join us again on either on our Discord, which we have on every weekday. We have a workshop just for you where we get together, explain a little bit about trading, exchange experiences, and we learn from each other every weekday. Today is going to be Rich, our in-house performance coach, that's going to be holding that workshop. And if Discord, if you're not able to catch us on Discord, join us on our next stream on right here. So have a great remainder of your day, and hope to see you here soon again. Bye bye.